Yo, what is up for everyone watching this on the YouTube replay? I hope you're having a great day. The market was really red on Friday, but I actually picked up another stock. Well, I picked up some shares, but I also want to go over some stocks that I think are very interesting to buy the dip on. First, let me give you a quick portfolio update. So here's our Webull portfolio, known as like our risk on account. We're only up all time in here. I love being fully transparent, but all time we are up 19.5%. And these are all the stocks that I own in here. We also have some like bigger losers down here. Our newest position that I really like in this portfolio is ticker symbol SO, Southern Company. It is a regulated utility with a 3.5% dividend yield, trading at 19 times forward PE. So I decided to pick up 11 shares. Then they should just give you like 6-7% of your money back a year, which is really cool when you include the 3.5% dividends, and then hopefully like 3.5% to 3% stock price appreciation for like a total 8% return a year. So here's my dividend-only portfolio where actually every stock in here pays a dividend. Luckily, we're up on every single holding in here except for Carlyle Group. We are still just barely down on them. But yeah, our McDonald's position took over Constellation Energy. McDonald's has done surprisingly well. It's really close to all-time highs. And yeah, year-to-date, we're up 15% in this portfolio. We also have a Roth IRA. And then I'll show you the stock I actually just bought more of. It's in our other portfolio. But this is our Roth IRA right here. And looks like the only stock that was green in here on Friday was our healthcare play, ticker symbol HCA, which kind of makes sense because they're like a hospital. Usually whenever tech is doing bad, they like do good or something. But anyway, here is our Moomoo portfolio where once we buy a stock in here, I can never sell it. And this is the new stock, or not new stock, but I actually decided to pick up one more share of Amphenol stock on the dip here. On Friday, they fell 7.08%. So I decided to pick up one more share. The valuation seems pretty fair, a 31 forward PE. Its current PE is a 43. So the EPS is expected to just monster up higher for the next 2 quarters. And I think it's even lower than that. With the new CommScope acquisition, I'm just so bullish on Amphenol, so I decided to pick up another share of them. And we've kind of been nibbling on some more Ferrari. I've been buying some fractional shares, not whole shares. In this environment, it makes sense to, do some fractional share buying. But yeah, here's some other stocks I want to share with you that I think are really interesting. First off, this stock right here. And hey, what up, Plasma? Here before Looney. Good to see y'all. And Francisco said SoFi. Yeah, we'll look at SoFi. We'll check out all these right here. So Otis Worldwide, you've probably never heard of this stock before, but it's actually pretty interesting. If you're wondering what does Otis do, well, they're like the only publicly traded way to get exposure to elevators and elevator servicing. They service so many buildings, elevators, and here's the servicing revenue right here for the elevators. Elevators are so expensive, but the best part is if we just go down here to their net income, and this was a it's a hard one-time comp, the actual business grew, but they're easily making, call it 300 plus million of after-tax net income every quarter. And what is Otis Worldwide doing with, 300 plus million of after-tax net income a quarter? Well, they pay a dividend, and the dividend only cost, where is this? Yeah, the dividend only cost 164 million. So since they have some leftover money at the top here, they're doing a couple hundred million of buybacks every quarter as well. So you get a 1.84% dividend, 37% payout ratio, monster dividend growth. So yeah, this is your publicly traded way to get exposure to. They engages in manufacturing, installation, and provision for escalator and escalator services. So it's yeah, that's what I meant to say. I was saying elevators. I meant to say escalators, but yeah, pretty interesting actually. Like the Eiffel Tower is one of their customers. Okay. That one's an interesting one. I just thought OTIS Worldwide. Your publicly traded escalator play. So another company I think is a pretty fair valuation is AutoZone. Whenever a recession happens, different companies respond differently. And usually what happens is people put off buying a new car and instead work, fix, repair on their old car. So AutoZone somewhat has a recession resilience to it. They're trading at 22 times forward PE. They don't pay a dividend, but the way they return money to the shareholder is via share buybacks. I'm kidding you not. They buy back like 3 to 5% of all the shares that exist, no matter what. Like they literally have a rule where the main way they return over 50% of the net income to the shareholder solely in share buybacks. If you look at the top here, just for all of it, actually, let's look at the annual basis here. Annual share buybacks here. Yeah. So wait, it reset it down here. Where's share buybacks? So yeah. It's this fiscal year. So yeah, in like 2022, they did 4 bill of buybacks, 3.5 billion, 3 billion. And that's super accretive to right now's EPS. Like they did 4 billion a share buybacks at like 1,800. And now it's, 1,300 when the market cap was like 30 billion. Anyway, AutoZone's a great never sell stock, I think. And Francisco, yeah, let's look at some of y'all stocks. And I got some other ones I want to share with you guys. Someone said SoFi, or yeah, let's do it, Francisco. Wealthfront went public. What's their ticker symbol? Hey, what up? Good morning. Angel and Gary, good to see y'all. Rocket Lab, hey, Uber, yeah, we'll try and get to all these. Don't worry. So what's the best way to see your portfolio? Like mine, it's just my YouTube channel and on the streams I do portfolio updates. But here's SoFi Technologies right here. This is a stock that I do own, actually. I do own this one in my risk on portfolio. It's one of the stocks every share I've ever sold of, like SoFi, Robinhood, Futu, Dave. I own a lot of fintechs. But yeah, SoFi right here, they are expensive. So buying it at right now's prices is tough because the forward PE is a 48, but they certainly deserve a high multiple because SoFi has some of the most insane growth I've ever seen. And like, check this out specifically. If we go to their financial services right here, here's what justifies that high multiple on SoFi. I mean, this is incredible. The revenue's up 76%, after grew 101, after grew 220. Like, check out just every quarter. It's like almost triple digit growth rate, just all for eternity. So SoFi just has so much growth that not even the analyst expected. We can see what those analyst expectations are down here. That's the orange line. And notice every single quarter, they beat on revenue, they beat on EPS, they beat on EBITDA. They just beat expectations every quarter. So that's why, no wonder people are starting to take SoFi really seriously. They're making real net income. They have real growth. They're almost at $1 billion of revenue a quarter. And like next quarter, they're going to be there, I bet. Well, let's see. And I'll start expecting next quarter 986 and then $1 billion the quarter after. And they usually beat on that. So hey, SoFi is one I do own. Wouldn't have it as a major size position. Certainly if like you're buying today, but great growth company. I mean, a pure growth name, but the risk reward at this valuation is a bit tough. I rediscovered ANET and CIEN. What is Sienna? I actually haven't heard of this one, or we haven't looked at them. Let's check it out. With CleanSpark, yeah, that's some kind of, hey, Nick, what up, dude? Yeah, we'll check out CleanSpark too. That's not too good of a company I wouldn't buy. But here's Sienna right here, a $30 billion company. They're currently trading at 257 times net income, but they're trading at 62 times next year's net income. So there's just a lot of future growth expected here. So what are they? Networking platforms. So that business is actually at a record 940 mil of sales. It's never been close to that before, almost at $1 billion there. 69% of the revenue comes from the US, and they're beating on expectations. They beat on revenue. They slight missed on EPS this quarter, but they beat on EBITDA. So maybe there was some like little one-time adjustment there. Yeah, so there was. If you go to the net income, it says it's down 47% year over year, but that core business actually grew 91%. Sales were up 20. So that's probably why this one's had such a monster rally. Again, another tough one to buy just because the valuation's so high. Maybe I can click on their website right here. Sienna, Nubis AI. So some sort of let's see, hardware, software, services, network, service, automation, Blue Planet Automation. So it looks like communication equipment, optical communications. It's kind of like their industry chain right here. So anywho, seems interesting, probably definitely benefiting from the whole AI boom. So the thing with CleanSpark is CLSK. This is a CleanSpark right here. And I'm not even picking on just CleanSpark here. It's all the Bitcoin mining companies. There's just never, like, real talk, an actual scenario where I'd ever recommend a Bitcoin mining company over actual Bitcoin. There's not a single Bitcoin, like, look, this company right here, if you're wondering what they do, if you look in the middle, 100% of the revenue is Bitcoin mining. So they're a Bitcoin mining company. They just own a bunch of GPUs. That's it. And it's not just CleanSpark. I've looked at, Marathon, HUD-8, Core Z, Hive Blockchain, all of them. They don't ever actually outperform Bitcoin. So, and it's in the long run. So I just would not recommend them over Bitcoin. What platform is this? Hey, what up, Moz? Yeah, if you want to get this brokerage where you buy stocks on, it's in the link tree in my bio. Very first link there. My favorite broker. WLTH was the IPO. Wealthfront. Actually, are they like a brokerage or something? I haven't heard of them, but let's check them out. I bought Oracle on Friday. Hey, what up, Luffy? What up, Nick? Ooh, Visa. Yo, we'll look at Visa too. Visa's real cool. So they're only a $2 billion company. So 2 billion market cap. Let me see what they do again, or let me just click on their website right here. Are they a Canadian company? I don't know. Booster APY. Um, yeah, so it looks like a kind of competitor to like a Robinhood, Robinhood, Webull, Futu, SoFi, all fintechs are doing great right now. Looks like this one for the full fiscal year, looks like the year over year sales are up 42%, which is great. And it looks like, yeah, they made 100 million of net income for the year. So they're making 25 million net income a quarter. We really don't have the history to tell if that's real, but anywho, that's interesting. They just IPO. Like, there's only one candlestick of data here. I wish I could look at more here. Hey, Brian Paul. Hey, good to see you, man. We'll check out REVG after this. Let me check out Visa real quick. You know who actually owns Visa? This is a great never sell stock, in my opinion, as well. Actually, even Nancy Pelosi owns some Visa. They have a shared duopoly for the basically credit cards. Visa and Orange Money Group launch a virtual card in Africa. Visa Money Collaborate launch a Visa Pay in Vietnam. So it looks like Visa's doing some international exposure. I am looking to see if there's any. Oh, they reported earnings? No, they didn't. Well, anywho, let's just go look at how the business is doing because they print money. Check this out in the middle here. They're easily making 5 billion of after-tax net income a quarter. And what is Visa doing with 5 billion net income a quarter? Well, of after-tax net income a quarter, well, they reward you with a dividend. They actually spend $1.1 billion a quarter paying you a dividend, and they can easily afford that and afford to double that and raise the dividend significantly. But they do the smart thing. They don't suffocate themselves with a high dividend to payout ratio so they can do share buybacks. At the top here, they're literally doing 4 billion plus of share buybacks every quarter, plus investing internationally. Oh, actually, I never knew that. Look at that. So for Visa, 61% of the revenue is international. The US is only 39%. So yeah, there you go. Visa, just a safe company to own. Now, 27 forward PE. I mean, that's crazy. And here's what those share buybacks do. Again, if we look at the net income, it declined by 4.3, but the net income per share only declined by 1%. The share buybacks really helped out their EPS number there. So pretty cool. Hey, Tommy, Hades, good to see y'all. Sorry, drinking my tea here. I'm a little behind here, so we'll kind of rush through these. Hey, Caden, what's up, dude? What app you using? Yeah, hey, again, if you want to get this app I'm on right here, it's actually a brokerage where you buy stocks on. It's in the link tree in my bio, that very first link there. It is an affiliate link, so if you go and deposit $100, we'll both actually get like a free stock or something. So anyway, check this out. REV Group, if you look in the top right, a $2.85 billion company. The forward PE is a 17. So that implies to me, like the current PE is the 30. Four piece of 17. This is the kind of stock that's just going to probably continue to climb higher. Plus, to pay a dividend, let's go see what they do. Specialty vehicles, huh? That's actually, I want to look into that a little more. Let me go to their website. Specialty vehicles, is that like military kind of vehicles? Oh, so look at that. That's kind of niche, like ambulances, fire trucks, big RV kind of so that's actually really interesting. Here's your way to get exposure to, I guess, like fire. So anyway, that's actually really interesting. We'll put this one on the watch list. There's not many other stocks like that. Let's go look at their numbers. That's actually real interesting. So yeah, so we were looking at that. The specialty vehicles, probably like the fire trucks, and then this recreational vehicles is like the RV. So the RV, whatever, it's actually the lowest amount of sales for the fiscal year 2025 was 649 million. Yeah, that's the lowest since 2016. So that's not good. But let's check out their specialty vehicles. We only get well, it's up 15% year over to 500 million. It's actually never been over 500 million before. Looks like this quarter specifically was a nice little record. Let's go see what analysts expected. Yeah, they beat on revenue. They slight missed on net income, and they slight missed on EBITDA. So, but let's go look at their numbers. They're making 20 to 30 mil in net income a quarter. Cash flow is a little bit better. Do they pay a dividend? You get a point. Actually, that's cool. You get a 0.4% dividend, 12% payout ratio. It seems interesting. I like that stock, actually. I do like that one. What stocks are you looking after the dip? Hey, you'd like the very beginning of the stream. We were looking at a few names here. I really like AutoZone, Otis Worldwide. This is a stock we covered at the very beginning. Otis Worldwide, if you're wondering what this company does, it has a crazy dividend too. 1.84% dividend yield. They print net income. They're the number one publicly traded escalator play. They manufacture and service escalators. Like one of their customers are like the Eiffel Tower and a bunch of malls and stuff like that. So pretty cool, actually. So wait, so that REVG, that was a cool one. That was a cool one. CEG, hey, what up, Paul? So yeah, CEG is one I actually own in my Robinhood portfolio. I will never sell this name. This is my favorite utility company of all time, and it's benefiting so much from the AI demand because this is the number one traded by far. There is no close second even. Nuclear play, pure nuclear play. They literally own over 30% of the U.S.'s nuclear reactors. There's not even a close second. I mean, Vistra Energy is a second, but not even by close. So number one nuclear play by far. Nuclear reactors are just in such demand. That's what all the data centers want right now. Plus, this acquisition of Calpine, they have just the best numbers. They have great net income, great dividends, great share buybacks, great M&A. I have nothing wrong to say about this company, except its valuation might be a little pricey here. Although when the Calpine acquisition goes in, the forward PE is around a 29 on them right now. So that's not nuts, 29 forward PE on my own little numbers there, but hey, no problem. Good to see y'all. What up, Nick? Would you get in CG after the dip? Not meaningfully. I wouldn't buy it meaningfully. Like the dip isn't good enough yet. But one stock I did buy on Friday as well was Amphenol stock. I decided to pick up another share. I never mind. I rose my cost basis by over $2 a share. Like my average cost went from like 64 to like 67 after I did this, but I don't mind. Like it's the quantity of shares you want that's always going to like that's what you should focus on. Even though it like lowered my total return, I don't really care. So that one just had a good valuation to me. All right, CMBT. What's this one right here? So I haven't heard of this one. Nathan, I know you don't like stocks like this. I have truly faith in ASST. Hey, we'll check it out. You know what? Yeah, sounds like some Bitcoin holding company. We'll check them out. They're from California. Well, like a SoFi Wealthfront. That's cool. Okay. We'll look at CMBT, then we'll do, what was the other one? ASST. Okay. So here's CMB Tech. This stock has not done well. Actually, dang, this stock is the same price that it was in 2012. So if you bought the stock in 2012, it's the same price that it is today. What do they own? So all the revenue comes from Belgium, it looks like. What is this company? Let me see here. Independent Tanker Company. Oh, so it's one of the shipping companies. It's like a Zim. Okay, bro. Okay, the cookies. So yeah, it's just a shipping company, kind of like a Red Sea play. Whenever there's those supply chain logistics issues, like in 2021, that's when these things really benefit. But in the long run, these don't really do great. But what you do get is a nice yield usually. They change the dividend every year. Notice the stock price is $9 a share. In 2024, you got $5.60 in dividends, which is 50% over of the entire stock price just in the dividend. The year before, another $3. But notice other years it's zero or like 9 cents. So it's whenever there's those issues, these kind of companies benefit. What did that? Yeah, dang, look at their profits, their net income down here. Look at this. So they used to be printing a couple $100 million a quarter, but now it actually, these year-over-year declines certainly aren't great. This is probably why they're the same price as they were back in 2012, So anyway, I'd be careful with that one. Okay, ASST. So, remember, guys, everyone is a genius in a bull market. Remember, yeah, a rising tide lifts all boats. Wait, ASST. Okay, so yeah, this one I would not. Let's see, it's a $700 million market cap. So I truly have faith. I don't know where you get that faith from, but let's go see what they do. Maybe they're trading at lower than their NAV value or something. But yeah, let's see that income. So that's weird. We don't get their data. We don't get their financial data. So here's their balance sheet. This looks good. So they have 790 million of assets, which I'm assuming is the Bitcoin, and the whole entire company is worth 703 million. So usually these, they trade around their NAV value of the Bitcoin. I like that there's no liabilities here. Where are they headquartered? USA. We can go to their website right here. Set to expand. Bitcoin strategy. That's why okay. I'd be careful. Our ETFs. So they actually have ETFs. What's the ticker symbol? BUXX. All right, let's see the AUM under their ETF. BUXX. Strive Enhanced Income. Oh, so this is a Treasury bond ETF. What's the AUM here? Are we going to get AUM? Oh, I just saw it. Oh, well. I don't even know why I'm looking at this. Interesting. $300 million of AUM in that ETF. Interesting. I'd be careful. I certainly wouldn't trust that with a lot of money, but it's interesting because it looks like they're at their same market cap as the value of the Bitcoin. Yeah, hey, try not to spam there. Hold on here. Uh-oh. I know you don't like Oklo because they don't have any revenue, but would you invest after that? No, nothing would ever convince me to buy Oklo. It's just not. I mean, I would buy this as a short-term kind of swing trade, but even this is a billion-dollar company at most. I mean, I don't know how they're 13 billion still, but this one, but you buy because hey, someone could say, "Oh, did I just unplug my mic?" Oh no, probably not actually. Okay, we're good. Um, Oklo though, maybe you could buy it as like a dip on the RSI dip, but not one I would ever trust. Like I would buy CEG on the dip. Okay. Would you do energy transfer? Yeah, that one. I this isn't a stock. This is actually, I try to warn people about these. This is actually a unit. Whenever you're buying this, you're actually buying units in a company or in this because this is not a stock. This is actually an MLP. An MLP stands for a master limited partnership. So you're not a stockholder. You're literally a partner in the company if you buy this. And they send you a K-1 tax form, and they're notoriously hard to fill out. In my first year investing, I didn't know about that, and I accidentally bought an MLP because I'm like, hey, this dividend's crazy, 8% yield, but it cost me a couple $100 with an accountant. So unless you literally have like a lot of money in the MLPs, you would not really want to own these. Or you buy in that aside, you buy this to really maximize your dividend income because it seems to appear they do have a 8% dividend yield. It looks like it does change every year, kind of. But yeah, your most of your returns are going to come from a dividend. Now, there is another interesting way to get around that. If you check out ticker symbol AMLP, this is the Illyrian MLP ETF. It owns a bunch of MLPs, and it doesn't give you a K1, and you still get the high yield. Look at that yield your dividend payout every year going up. You get an 8.3% yield. Again, you look at this. It's the same price that it was in 2019, like all the BDCs. You do not buy this expecting to outperform the S&P. You're buying this to just maximize income. Ooh, Capital One Financial after the Discover merger. This is really interesting here because the forward multiple is a 14. That implies that this stock, in my opinion, is just going to go higher and higher. You know, American Express, a lot of these other names are also at all-time highs right now. So you have their credit card, consumer banking, and commercial banking. So the net income went negative last quarter because of the Capital One Discover merger. If you just go to the Cashman, you can just see that right there. But if we go right here, the revenue growth, of course, it's up 55% year over year because it merged with Discover. But that forward multiple of a 17 is really interesting. You get an over 1% dividend, and the pay ratio is actually probably around like a 16%, not a 20%. So actually, I do like this name. Probably just a safe one to hold. SoFi 7X, but it will cause another 8X. I don't like the risk reward on SoFi. Yo, I'm a shareholder of SoFi. I'm like a perma-bull on them. I'm never selling my shares ever again. I regret every share I've ever sold of SoFi, but the valuation is pricey at this price. This says a 74 forward PE. I mean, it's a tough one to buy meaningfully at this price, but so a lot of these are like Robinhood is too. Another one I regret every share I've ever sold of. Like we used to own a lot more Robinhood and SoFi, but we sold most of our gains for like when I doubled and tripled my money, which was the dumbest thing I ever did. But yeah, SoFi is a great growth stock. I mean, phenomenal growth on them. Would CEG be a good buy at the moment? I have $400 of buying power. CEG, this app right here, actually, with the Calpine merger, the forward multiple is a 28. This is a stock you want to certainly put on your watch list if you're looking for it's still not like the best deal here. Like I'd love to see it get back to like 330, 320, 330 is like a more safer entry point. But I'd put this on the top of the watches if you don't have any exposure to utilities. I think this is going to be the growthiest utility out there that exists. Number one nuclear reactor play. The Calpine merger, I kid you not, this Calpine merger, whenever it goes through, and it's going to do it this month, it's going to add $2 of yearly EPS to them. So that's 50 cents of EPS a quarter just from now on for eternity. That is just synergistic from this acquisition. So yeah, they're acquiring Calpine. That makes them number one. Well, they're already the number one nuclear play. They're going to be in the top three natural gas plays. Number one geothermal play after this. Like they have this uh, area called the geysers in North California. It supplies like 20% all of California's clean energy from these geysers that release steam, and they capture that and like circulate it and create energy. Pretty cool. There's only few places in the world. Nathan, is there any perks if I become a member? Yeah, yeah, you get access to the Discord agent, but no, not really. Besides the Discord, there's no real benefit of becoming a member, just other than to support me. But there's a little Discord you get access to. Um, and I don't, so, or if you don't want to become a member, you can still join the Discord for $1. I never like to promote it because the only reason I put the Discord, I made it bare minimum. I made the price $1 because when I had a free one earlier, it would have so many scammers and bots. And actually, truthfully, I like it when there's only 20 people in the Discord. I like it when there's so little people because I can answer everyone's question. Okay, yeah, if you want to join the Discord, it's in the link tree in my bio. But I never like to talk. I've never mentioned my Discord before because I don't really like mentioning it. But okay. And what do you think about Inspire? Is that a stock right there? What's the ticker symbol for Inspire? Path or PSIX at the moment? Yo, I would do PSIX for sure. And but this is still the kind of stock. And actually, the time to buy PSIX was kind of a week ago. You don't have this as a meaningful size position. Like I don't, but the valuation's cheap. A 12 PE. It's an industry I want to be in. A $1.4 billion market cap. That's like it's almost like I call it like my next Powell Industries. So I really like them, but you keep it as a small position and then you let it grow to a meaningful size position. Hey, OLP Papa, no way, man. Thanks for those gifts there. I do appreciate that. Hey, what up, Daily? Said it's because of the very large investments that are made in certain companies. I don't seem to believe investments or. Oh, hey, what's up? Has anyone had their investments just up and disappear? No, or well, maybe evaporate to zero if it's some trash company. Like we've all been there. I used to own a lot of junk in my portfolio. I've lost so much money on like stocks you can't even see in here. Like I completely sold out of Charge Point and like Smile Direct Club I owned like a long time ago and lost like 50% on it. SoFi not worth the buy. Yeah, it's tough to buy SoFi right here at this price. Someone said Adobe. You know what? Let's do Adobe. They just reported earnings, and I haven't looked at their earnings actually. So, and that was 2 days ago. So let's go get a fresh look at what Adobe reported. Adobe's really getting hurt by the AI thesis right now. Like in 10 years from now, will we need Adobe and Photoshop and After Effects as much when we can just get, ChatGPT, Gemini, just AI create a great looking logo or thumbnail or whatever you needed? The forward PE on Adobe is a 20, so they're certainly a cheap company. So forward PE is a 20. Let's go see what they reported. So they beat on revenue, they beat on EPS, and they beat on EBITDA. It was a triple beat quarter. That's great. They kept up the double-digit growth, 10% revenue growth, 10% net income growth. So they're Adobe's easily making $1.8 billion of after-tax net income a quarter. So they're easily making $1.8 billion of net income a quarter. And what are they doing with it? Here's the best part. If we look at the top here, Adobe is spending all their net income on share buybacks right now. They're doing monster share buybacks, $1 to $3 billion of buybacks a quarter. Here's what that does for you. If we go to the net income, it's up by 10.2%. Net income's up by 10.2, but the net income per share is up by 17.5%. Remember, the net income growth rate and the EPS growth rate should always literally be the exact same. The only thing that changes the EPS is the share part of the ratio. If they either diluted you or bought back their own shares, that's what changes this. And in this case, they bought back legit over 7% of the entire company, and that's how the EPS went up by 17. So I love the share buybacks. I'm a believer that in the long run, humans are always going to kind of need that final touch on art, but I wouldn't have Adobe probably as a meaningful size position, but it's one like, it's like worth nibbling. Like it's certainly not worth just not owning ever. It's worth maybe looking into. I'm on an Adobe product like every day. Circle Internet. Wait, Circle Internet. Is that I don't know what Circle Internet is, but I have Circle right here, like the stablecoin company. This is actually so this is Circle Internet. So they are called that. So Circle right here, this is like when you're only publicly traded or basically only publicly traded stablecoin play. This is the company that literally owns USDC. So if you've heard of USDC, it's like a crypto stablecoin. Let's see what their market share was. I think they have, Okay, yeah, number one right here. Reserve income surged 66%. That's 96% of their total revenue. But that's supported by a 108% increase in USDC circulation, and their stablecoin market share is now at a 29%. So out of all the stablecoins, USDC has a 29% market share, which is pretty cool. And Circle, I think, is partnering with Walmart too to make like it looks like they have some subscription revenue too. That's cool to make it like a credit card where they can avoid paying Visa like a 1.5%, 3% fee. So this top line growth is so impressive. They just IPO'd, so there's not too much data, but they really are profitable. Wow. 80 mil in net income this quarter. Sales are up 65%. Last quarter is up 50, 58. So this USDC stuff, the stablecoin stuff is really interesting. And I think Kathy Wood also owns that name too. Can you check GMED? GMED. Let's do it. What up, Mitchell? Let's do it. So, fast stock. Hey, we'll do fast too. So Globus Medical, an $11 billion company trading at a 26 forward PE. They just had a massive gap up on earnings. So let's go see what this earnings report was because it went from 60 to 90 bucks after it. Do I try and pronounce that? Musculoskeletal. So this is impressive growth in the middle here. 26% revenue growth. After grew 65. After grew 54. After grew 9. So they're on a nice growth. Let's see what they expected. So here's why they gapped up so much on earnings. Analysts expected 730. They did 770. So they beat on revenue. They beat on net income, and they beat on EBITDA. It was a triple B quarter, and they beat on every metric by a wide margin. Oh wow! And this just adds to the safety here. It's just takes risk off the table when a company has such a monster balance sheet like this. It's like no debt at all. Let's see net income right here. So yeah, look at that. And that's real net income too. That's the crazy part. Like the operating profit really. So there's just margin expansion that they have. This is so impressive. I'll put them on the watch list. Looks like a medical device company. Looks like some sort of robotic technology right here. That's actually pretty interesting. Thanks for them. I'll put them on the watch list. Thanks for that, Mitchell. Okay. Calm. Hey, what up, Dot? Connor said fix. Ooh, and Sean, remind me to get to OMSC. I'm missing some of these, but this is one of my newest purchases actually in my Webull portfolio. If we head over here, we got 5 shares of Calmain. What is Calmain? Well, they're actually the number one they have the number one market share for chicken eggs in the US. It's crazy. So whenever it's a commodity stock, so you don't want to have this as a meaningful size position. I got 5 shares, but these kind of commodity stocks have crazy dividends. You get a legit 9.5% dividend, but they change their dividend every single quarter based off how much they make. They pay out 33% of whatever the net income they make is. Like this quarter was $1.38, last quarter was $2.35, then $3.50, $1.50. So it changes every quarter solely off how much net income they make. And check this out. So as we know, egg prices have been pretty crazy, and so that they've been printing net income. Like literally, I forgot to get to the best part. Let me show you this first. Look at the top right here. This whole entire company, if you could buy, you're buying in at this valuation, you could buy the whole company basically. You're buying this company at a $4.2 billion valuation. So you're paying $4.2 billion for a company that literally has $1.25 billion of cash on hand and no debt. So already 30% of the market cap is their cash on hand, and you're buying a stock that prints a couple hundred million of after-tax net income a quarter. Like it's insane. And you get a dividend, and it's a low valuation. They trade at 3.3 times net income. You really look at the forward PE because it's expected to go down. So forward PE is a 13. So they're trading at 13 times next year's net income. So yeah, I did buy some Calmain. Pretty cool name. OMSC, what was this one right here? OMS Energy Technology. So a very, very small company. They're only worth $180 million. Normally we don't cover these kind of stocks, but let's check out what they do. Specialty connectors, that's an industry that's really popular. In 2023, the full year, the revenue was 48 mil. Now it's 140. So we only get that's so weird. We're not really getting much like actual numbers. Maybe it's just on that brokerage. Let me try it over here real quick. Maybe this company just doesn't report their numbers because they're a $180 million company that just IPO'd. So yeah, we don't really get their numbers right here. And it's saying that actually the revenue just fell 42%. Did we get quarterly data here? Nope. Or wait, quarterly? No data. Okay. So again, they just IPO'd 170 million market cap, but that market cap is just tough to trust it. So but connectors, that's what Amphenol's doing. Actually, just bought a share of Amphenol on Friday. So yeah. Okay. What about IRM? Almost went to 89 returns today. Actually, yeah, Iron Mountain is one I also just bought in my Webull portfolio. This is a data center REIT. You're buying this mostly for the income. If you look at the dividend, you get a 4.15% dividend. This is a REIT, a real estate investment trust, and they literally have to, by law, pay out 90% of their taxable income in the form of a dividend. So that's why they have such a high yield. It's actually completely normal. So that's why I bought them. They're a data center REIT that has been in some heat right now. So Cooney said FIX. You know what? We'll do FIX. In Amazon. Remind me to get to Amazon too. There's so many stocks I got to get to. I'm so behind. I apologize here. But yeah, you know what? We'll be quick about this one. I do own this one, and they tanked. Well, actually, they had a recovery. They were at one point I watched it fell to $912. It was down like 10%. But it only fell 5.5% on Friday. Well, pretty much they were at an all-time high before today or on Friday. We were buying the absolute dip on this company during the January, February, April dip, the tariff fears. And here's why I'm not selling this company. The forward multiple is a 32. They literally traded 32 times next year's net income. Now, this is an industry that's in such demand. MEP work, mechanical work, that's up 25% year over year. And their electrical work is up 71% year over year. Highest quarter ever by far. Just everything here's headed in the right direction, beating on every expectation. Check out the orange line. That's what the analysts expect. A massive beat on revenue, massive beat on EPS, and massive beat on EBITDA. And remember, the forward PE removes these two quarters and replaces them with these two. So the forward PE is actually even lower than potentially at 32. It could be like a 28 forward PE if my numbers are perfect. But check out this right here. Here's what's so impressive. If we look at the revenue is up 35. But the net income is up by 99. What does that mean in English? That means there's margin expansion. Their net margin went from 8% to 11.9. That just adds money to your bottom line, especially when you're doing $2.5 billion in revenue a quarter. And so what are they doing with, they made $290 million in net income this quarter. They made $500 million of free cash flow. Well, they pay a dividend, and the dividend only cost, I kid you not, $17 million. There's so much room for them to raise their dividend, and they've actually been raising the dividend every quarter. You don't see any other stocks really do that because none are really in the position to do that. But look, this company's dividend was 60 cents. Last quarter was 50, 45, 40, 35, 30. So they literally are raising their dividend quarterly. You do not trim this stock if you own this one. Like, this is the kind of stock that's going just higher and higher. And they just got added into the S&P 500. Can you buy European stocks? I can. I actually own Ferrari, if you noticed. They are a European company. We converted the currency to USD. But yeah, Ferrari is one I've been slowly buying. But yeah, if you want me to look at a European stock, let me know there. Hey, yo, what up, Jay Shelton and Spread the Wealth? Good to see y'all. Jill Lead Science. Yeah, hey, the thing with this one is I think they're still a revenue-less company, or maybe not. Let me just check it out. GILD real quick. Actually, no, I'm thinking of the others. So there's a lot of gene splitting companies. I think Jill Lead Sciences actually might be the one. Okay, so check this out. Actually, no, they're not a gene splitting company. I think they just own a bunch of different prescriptions here. We can see their main prescription right here. I don't want to try and pronounce that, but check out the annual revenue growth there. That's been nice. Discovery. Well, these are the weird how they're reported. So this quarter specifically, it was a big beat on expectations. They beat on revenue, they beat on EPS and on EBITDA. Whoa, that was a massive beat this quarter. Like, they really did make $3 billion of after-tax net income this quarter, even though so the revenue was only up 3%. The net income grew 140. So that means there's just 40% net margin, and that was a real net margin as well. That's actually insane. That the margins you can get on some of these prescriptions, like royalty contracts and other revenue. Looks like they're collecting some royalty income or something. Anywho, and you get a 2.6% dividend. They kind of remind me of like an AbbVie. Yo, didn't know you were streaming. Yeah, hey, what up, Jay? We try to stream every day. I've been busy, sadly, the past 2 days, but we're finally back on track. I might actually even do another live stream tonight, and we're gonna be doing two live streams tomorrow, two 3-hour live streams tomorrow. If you wanted to follow my, by the way, if you wanted to follow button, we stream every day. I literally sell nothing. I have no course book, nothing like that. Hey, Hector, dude, with the 10 SpongeBob's. Heck yeah, Hector, I appreciate that. If you got a stock, give me a look at. Let me know there. Look at LAD after this. So here's the trade desk. This is your TV advertising company. And unfortunately, the stock is just too, like, it deserved this massive gap down from $90. The thing is, even after this massive like decline, the stock is sadly still a bit expensive. Like the PE right now is a 41. I mean, they always trade expensive. They always trade at like high multiple, but 41 PE might still be a little pricey. Check this out though. They make great net income and these are good growth rates. If you average it out, easily over 100 million of after-tax net income a quarter, but they are seeing increased competitions. What does Morningstar say about their moat? Oh, so their moat is narrow. Because they've been seeing increase. Basically, can they protect themselves from like competition and stuff? Yeah, here we can read like what the bulls say and what did the bears say. Firms like Google, Meta have no incentives to work with trade desks since it would compress their ad revenue, will require considerable technology buy-in. Amazon's demand-side platform directly targets TTD advertising space. This is what I was talking about earlier, about this increased competition from Amazon and their Roku partnership. So one thing, for example, Netflix used to actually go to the trade desk. Netflix used to use the trade desk to put ads on their, ad tier subscription, but now they actually switched over to Amazon because it's cheaper. So it's just the future uncertainty that might be hurting this one and compressing the valuation. And the sad part is, the forward PE is at 35. That might still be like a little pricey. So I'd be careful with the trade desk. I'd rather, dude, Amazon's cheaper. That's the crazy part. Amazon's cheaper at a 29 forward PE. Obviously not a pure advertising play, but literally like 12 to 15% of all the revenues are advertising revenue on Amazon. LAD. He says, my brother works for them. They have been buying out a ton of dealerships. Let's check out Lithia Motors. That's actually pretty cool. Let's see what the multiple is. So it's a 9.3 forward multiple. That probably makes sense for this industry, the automotive kind of dealership industry, but 9.4 forward PE. I bet they can, when you have a low valuation like that, you can barely pay out any net income and have a massively high dividend yield, and same with share buybacks. So let's see. Yeah, you get a 0.6% dividend for only a 7% payout ratio. For example, Apple has a lower dividend yield and 3x, or actually probably around double the payout ratio for a lower yield on Apple. So let's see here though. Yeah, vehicle operations. So look at this net income or top line growth. The sales are up the revenue's up 4.9 and the net income did fall by 1%, but they're still printing easily 200 plus mil in net income a quarter. Let's go check out how much the dividend costs. So they're making 200 mil in net income easily a quarter, and the dividend cost 13 million. Look at that. Last quarter was 14.3 million. How'd the cost of the dividend go down? Well, actually, whoa, they just spent $400 million on buying back their own shares. They're always doing a couple $100 million of buybacks a quarter. That's so impressive, 400 million. So let's see. So the net income fell by 1.1, but the net income per share, no freaking way, is up by 11%. So yeah, 400 million whoa. So they legit actually bought back 10% of all the shares that exist. I can't believe it almost. Yeah, let me put them back on the watch list. They're a really cool stock, plus a nice dividend. Interesting there. The dealerships are the ones that always make the money. They're always like, you buy a car, and then there's like, $1,200 this fee, and then another line of $600 fee, and always some BS at the dealership. Okay, look up PAVE. Hey, what up, Shelton? Good to see you, man. So PAVE is actually the global U.S. Infrastructure Development ETF. Wow, it's actually at an all-time high. Hey, we'll check out SNY. Heck yeah, OLP Papa. Thanks again for the gift there, OLP. I appreciate you. Hope you're having a great day. So here's PAVE right here. It's an ETF, and an ETF is just a basket of stocks. And here's what they own in here. Oh, some aerospace names like Howmet Aerospace, Parker Hannifin, CRH. This company just got added into the S&P 500, actually. Norfolk Southern, yeah, that's infrastructure play. CSX, so Emerson Electric, actually, that's actually an interesting ETF there. I wonder if any of my holdings are in there, like a United Rentals, a Powell Industries, a Comfort Systems. They're all kind of, I like that ETF. So let me get to SNY. Let's get to SNY here. Thanks again for the gift. Let's see. Sanofi. I've not heard of this company before. The stock has been flat since 2020. Let's see if we can figure out why. So it's actually a European company. So let's convert the currency from euros to USD, trading at 11 times PE. They're a biopharma company. Let's check out the net income. Actually, that's real impressive. They really are. Whoa. So there's a little bit of a one-time adjustment. They didn't make 4 billion last quarter, but like they are legit making, if you average it out, like 2 to 3 billion of after-tax net income a quarter. So what's forward multiple? It's 11. So they're trading at 11 times forward PE. But it says the current PE is an 11.1, the forward PE is an 11.9. So they're actually expecting no net income growth, but they still print net income. I guess they're just not expecting any more growth. That's weird. Do they pay a dividend? Yeah, wow, a 4.7% dividend. So maybe they kind of suffocate them with the high payout ratio. But wait, look at this right here. So the EPS is $1.35, $1.90, but the dividend. Oh, this is I thought this was quarterly. So they actually do a dividend once a year. This is okay, so they have a 50% payout ratio. So they do one dividend every year at May. So May 2025, May 2024, May 2023. So they do a yearly dividend. I don't know about them. Not biotech company. I mean, they're printing net income. Interesting. Hey, Two Trick, what up, dude? Good to see you. I I love it. We have so much live content. Hey, thanks. STX right here. Ooh, Seagate Technology. This is one of the huge benefit. Oh, it's a can. Oh, thanks. Oh, okay. That stock right there is trying to cure. Okay, that's cool. Okay. Ooh, also, I know you like AutoZone. It's looking really good. Can you check out APH? It was down 7% yesterday. Hey, Travis, I actually bought a share of Amphenol yesterday. Yeah, let's check out Amphenol after this because I bought a share of them. It's a stock I actually bought yesterday, so I'll show you why I bought them. So here's Seagate Technology, though. We'll go over this one real quick. Here's why, if I own the stock, like it's had this monstrous stock price appreciation, went from $100 to $300. Would I be selling this company? Here's why I wouldn't be. I wouldn't be trimming either. They have a 24 forward PE. Let's go see that actually. The EPS, yeah, they're going to go from $1.50 to $2.50 next quarter, $2.57 the next quarter. So really, and notice they beat on EPS every quarter. The orange lines what the analysts expect. They always beat on EPS just because, their products are in such demand right now. So really a 26 forward PE and a 1% yield. Yo, that's actually interesting. Let's see what they do though. So yeah, they do solid state drives, HD drives, storage solutions, stuff like that. Except, okay, they always want my cookies. Let's see. Here's their website right here. Seagate. Featured products. Oh, so they have some expansion desktop, 4 terabytes, Iron Wolf Pro. So it looks like just parts that are probably in demand from AI right now. I don't know. There's some projectors and stuff too. So it's kind of interesting there. 26 forward PE though. You can't make that up. That's good. So let me show you a stock I bought yesterday. Hey, we'll get to Microsoft and Hood. Robinhood's a great one. I do own Robinhood and I use their platform. But Amphenol stock, this is one I bought on Friday. Checked it out. There's my one buy share. I bought a share up here at 135. Whenever I'm buying shares up here, my original cost basis was 66, and every time I buy a share, it raises my cost basis by a couple of dollars. I don't mind doing that because this is another one of the kind of stocks that I think is just going to continue to climb higher. And I just want more quantity of shares. I always regretted not buying more of this stock. So let me slowly build up my position now. You always want to buy a quality company at a fair price over a fair company at a quality price, as like Buffett would say. But yeah, the forward PE is a 31. If everything goes right with how I think this CommScope acquisition is, the forward PE is really like a 28. I'm just overly bullish, but the forward PE is like a 28 in my opinion. Check out the revenue. Revenue's up 53%. So the sales are up by 53. And the net income, the profits are up by 106. And that's real too. So what does that mean in English? Margin expansion. Net margin went from 15 to 20. It's never been over 20% before. Insane margin expansion right now. Yeah, here's what they do. One small part of their business is their copper cable business that they're supplying NVIDIA their copper cables for the NVLink spine product and stuff like that. But communication solutions, harsh environment solutions, interconnect and sensor systems, another industry that's just all the tailwinds from AI right now, and the technology industry just benefiting them. Same with the free cash flow. That's what FCF stands for. Look at the free cash flow, up triple digits the past 2 quarters. So everything here's headed in the right direction. So I bought them. Current PE is a 43, but my forward PE says around a 28, 29 if on my super bullish numbers. And you get a crazy dividend on that one. Let's see. AMBA stock. Ambarella, and then we'll try and get to Amazon. Procter & Gamble. Hey, Magic, what up? Yo, Procter & Gamble's, I think, a good stock to buy now, too, a safe one. So this is Ambarella. Sadly, they're actually the same price as they were in 2015. So the stock hasn't done too well. What do? Development and sales of low-power artificial intelligence-based processing video and image. Well, the revenue growth has been really good. It looks like a record for $100 million for like the first time ever. Well, it looks like there was a massive fall in 2024, but the growth is back. So the growth is back. Let's see. They are still losing net income every quarter, but their losses are narrowing. They lost 37% less, 42, 35. So they're losing less money, and the sales are going nicely. Obviously, probably kind of comparing from a hold down here, but great top line growth, and the balance sheet looks really good. Let's see. So they have $295 million of cash, no debt. What was the market cap again? So the whole company's worth $3.3 billion. There is no forward PE because they're still expected to lose net income for over a year. But that might be why the stock is the same price that it was in 2015. Because if we look at the annual revenue here, let me click annual. Yeah, it's still kind of like lower than it was in 2016. Yeah, dang. So, but it does look like the growth is coming back. I'd be careful with that one. Maybe not have as a meaningful size position. So Hood. Yeah, let's do Hood real quick. Now, Robinhood, I'm also a user of their platform. So I've probably given them a lot of commissions and fees and stuff. I have my main account and I have a Roth IRA with them. Yeah, they have a cool little match program. But yeah, Robinhood right here. They're expensive. A 50 forward PE. Certainly is really expensive, but here's why Robinhood deserves a high multiple. Like, they deserve this high multiple. And I regret every share I've ever sold to Robinhood. I'll never be selling out of any more of my shares. But check out the top line growth. The sales grew 100% year over year. So the revenue is $1.27 billion. Remember that. The revenue is $1.27 billion. And out of that, the net income, they netted $556 million. That's after they paid $80 million of taxes. Like, they really did net $556 million, which is a 43% net margin. These brokerages print money. And the reason Robinhood's doing so well right now is because they actually added in this prediction market stuff where, where is this down here? Yeah. Army at Navy. What does that mean? Oh, yeah. Anyway, whenever you buy and sell a stock on a brokerage, they make like a fraction of a cent. But whenever you go do crypto, prediction, and, pay for their monthly subscription and stuff, that's where they start to rack up money. So Robinhood's great. Will you review a German company? Yeah, check it out. Yeah, is AutoZone a buy after earnings? Yeah, let's do AutoZone real quick. Then we'll get to Microsoft, or we'll just see whatever happens. So we won't stick to a specific order. We'll just pick whatever stock I feel like. So AutoZone right here, again, another company that's like reacts to a recession differently. Like in a recession, like McDonald's is another example where the sales kind of go up in a recession. Like same with AutoZone, people delay buying a brand new car, and so they spend more time working and fixing up their own car. And even in a recession, your tire breaks, your battery dead or whatever, you got to get that fixed. Anywho, AutoZone, they traded a fair multiple. They traded 22 times forward PE. And check out this stock price appreciation. It just like never goes down, but it has been struggling recently because they did miss on their earnings. Let's see what they reported. So they slight missed on revenue, slight missed on net income, and slight missed on EBITDA. So they missed on every metric by like a low single digits. So yeah, the net income is for the past 4 quarters, the net income has been single digit and lower than the previous year. But the best part is, what is AutoZone doing with this net income? The reason the stock never goes down and just does so good is because they do insane share buybacks. If you look at the top here, they spend hundreds of millions of their after-tax net income a quarter on buybacks. They choose not to pay a dividend. Like, that's what made Advanced Auto Parts suffer. They don't pay a dividend. All AutoZone does is return money to the shareholder via share buybacks. If this company chose to pay a dividend, they'd have like legit a 4% dividend, but they choose not to. They do share buybacks instead. And that's what I love about AutoZone and why they're different. And the same with O'Reilly Auto Parts. They also are just a buyback monster. Hey, what up, Billy? Good to see you. Have you looked into Assurant? No, what's the ticker symbol for Assurant? We'll check that one out, actually. So, all right. ALMU, what is that one? I saw a few people ask about that one. Okay, so this is a small one, only a $320 million market cap. I'd be so careful with that market cap. Let's see what the revenue is. So your revenue is $1 million a quarter. What's is it? So next quarter it's expected to be 1.4 million. So it kind of makes sense why this market cap is so low. But they're barely losing any money. Like, they're losing $1 million a quarter, which is kind of significant when your whole company is worth $300 million. But looks like they just fortified their balance sheet. Was that from stock issuance? It was. So they did just dilute the shareholder by, like 8% of all the shares just this quarter, but it fortified their balance sheet. So it looks like some biopharma, or what was the industry on this one? Semiconductor. Oh, manufacture compound semiconductor materials. So, yeah, I certainly wouldn't own this one as a meeting. They got 24 employees. I'd be careful with that one. Just, only $1 million in revenue a quarter, dilution, good balance sheet though. I don't invest in stocks anymore, too manipulated. Well, hey, what I recommend is, of course, I don't recommend anything, not financial advice, but just buy in diamond hand the S&P 500. While it's stocks are manipulated to the upside in the long run, in my opinion. It's not get rich quick. The goal is to get 8 to 10% of your money back a year, and then you snowball. You put in $100, and then it turns to 110. But then it turns from 110 to 128, 128 to 150. You just keep kind of compounding with the S&P 500. Reinvest the dividends and stuff. So yeah, all I know is on average the S&P will return you 10% a year. Most investors, retail investors, and hedge funds cannot outperform the S&P. So you got to own the S&P 500 as the backbone of your portfolio. Then play around with some of your own individual stocks. Most of my stocks are just in the S&P 500. Google, McDonald's, Constellation Energy, United Rentals, Meta, Amazon, Coca-Cola, Amphenol. Whereas, all these are in the S&P, and even more of these. Okay. Let's do Microsoft real quick. Yeah, so Microsoft, I was meaning to get to that one. Mag 7, yeah, hey, the Mag 7 is good. Some I wouldn't buy, like I wouldn't buy Tesla, obviously. But yeah, Microsoft's a steal of a deal. If you're just looking for one of the safest stocks to buy, never sell, that will do great in the long run, is Microsoft. A 29 forward PE, for Microsoft, that seems very fair in my opinion. So, literally every S&P 500 company in one way or another uses Microsoft, or the people they work with use Microsoft. Like, this is a never sell company. They have this productivity and business solutions. Basically, think of OneDrive, PowerPoint, that software. They've turned from a hardware company to a software. And check this out. It's over $120 billion of annual revenue for them. It just hits a new record every year, every quarter. So after Bill Gates left, the new CEO just continues to drive up their software business. And not just that, they're also huge in the cloud. They have their Azure Cloud, Intelligent Cloud business. This is also another business that's over $100 billion of annual revenue for them. Just hits a new record every year, every quarter. Phenomenal. Then they have, of course, their Windows sales, which don't do good. I mean, that's, lower than it was in 2020, but That makes sense. It's the software business you want, and that's where the margins are. Check this out. They print 25 to 27 billion of after-tax net income a quarter. They're spending on AI. They own a bunch of open AI, 0.7% dividends, safe payout ratio. Microsoft's just a great never sell name. Like super, super safe. Like there's not many other safer stocks. Like just to trust for the long run. Like McDonald's, Microsoft, like a waste management. I kind of have that. I should actually, let me add Microsoft in here. AbbVie, MSFT. We're going to add them to our safe never sell watch list because Microsoft really is, literally better credit rating than the U.S. government. It's more likely that the U.S. government is going to default on their loans than Microsoft will, according to S&P Global and Moody's. All right. Heiko. Oh, I think Warren Buffett just bought the stock. VG stock. Hey, Prem, are you still here? We'll check out VG. Okay, so here's Heiko right here. Now, Heiko, 58 forward PE. Let's go see if there's any news down here specifically. Nope. I actually don't know what this company does. So it looks like aerospace and defense, they're saying, or maybe you can just click on their website to get a quick little glance of what they do. Engineering solutions, flight support, parts, repair. So maybe they repair and service like airplanes, kind of like a GE Aerospace. Looks like a little Mars rover picture there. That's electrical optic partic. So all that is said, let's go look at their numbers. Okay, so flight support group, that's seen some very nice growth. The revenue's up 17, after grew 68, after grew 23, after grew 33. Like they're on an absolute streak of growth on their flight support group. And let's see their other one, electronic technologies group. That's up to 355 million. It's actually never been over that before. Record sales there. So actually I can now see why this stock is at an all-time high right now. The aerospace and defense names always demand a high multiple. It really is expensive. But, check this out. They're beating on expectations. That's kind of the orange line here. Beat on revenue every quarter, beat on EPS every quarter, which is net income, and on EBITDA. So they're triple beating every quarter. No wonder this stock has done so well. Yeah, the net income growth has been phenomenal. So that must mean, margin expansion. Really good numbers here. So I can see why this one's done so well. And I'm pretty sure Buffett did just buy the dip on them. How did you find Fix and invest in them? I've known Fix since like 2022, 2023. And I remember I watched it report earnings this day and gap up. And I'm just like, all right, I guess I'm never getting into comfort systems. But I ended up buying them eventually. I don't remember exactly. Maybe it was from a YouTube video. I don't know how I found that one. Maybe it was someone in the stream, but I don't think I was streaming that long ago. Think Berkshire Hathaway's in this? Yeah, you're right. You know what? We could actually see the Warren Buffett / the Berkshire Hathaway portfolio really quickly. Buffett Holdings. His newest position, which was very cool, he bought as his only new position this quarter was Google. They bought Google. They sold out of DR Horton. Wait, what was the stock? Heiko. Let's see. HEI. Oh my goodness. I'm just clicking everything. Oh, this autocorrect, bro. Please. HEI, Heiko, there we go. We found it. So yeah, Berkshire Hathaway, they got 1.3 million shares of that one. Here's this whole portfolio. Everyone's freaking out like he sold Apple, 42 million shares of Apple, but it's still 20% of his portfolio, which is crazy. American Express, Coca-Cola, Moody's. These are all his companies right here at Berkshire Hathaway. Okay. Let's see. Heiko, interesting one there. Oh, VG stock. Let's check it out. VG Venture Global. Wow. So actually, that's not good. A new 52-week low. Microsoft or Amazon. Yo, YXS. I'd have to just pick both. J&J, Johnson & Johnson, also has a better credit rating than the U.S. Yeah. The Moody's and Fitch, they were too. They downgraded the U.S.'s credit rating too late. Okay. Here's Venture Global. Unfortunately, a new all-time low. Yeah, all-time low, because I guess they just IPO'd a year ago. The forward multiple is dog cheap, a 4.4. The current PE is a 7.3, so they're literally expected to nearly double their EPS the coming year. Yeah, look at this. Well, oh wow. So That's if they meet their expectations. Actually, every quarter they've been missing on their net income expectations by actually half. They expected 23, they did 16. They expected 20, they did 14. They expected 31, they did 15. So they have been missing by a big margin on their net income. Um, but wow, the operating profit has been soaring. So they made 1.3 billion, but they only netted 500 million. So there must have been some other one-time adjustment there where maybe on the adjusted EPS, they did hit this number. I don't know. Anyway, a 4.4 forward multiple, that cash flow growth is just insane. Engages in development and construction of liquefied natural gas production. Oh, it's like a commodity play. Low cost LNG to the world. Oh, so almost like a shipping company. They have these projects. Oh, Venture Global. There you go. Here's kind of some of their projects right here that you still haven't done, but interesting. A natural gas kind of commodity play. Interesting. Wish I could give you more thoughts on them. I wonder, does Morningstar cover this one? They do. Okay. Here's what the bulls say. LNG demand is certain to grow, and Venture Global offers investors access to the fastest growing opportunity, vertical integration, immensely powerful, creative firm. Their reputation risk is overblown as customers may have to buy from Venture if they want additional volumes in early 2030s. But the bears are saying, you can screenshot and read that if you want. Anyway, honestly, the risk reward might be decent on them if you're looking for kind of a natural gas or play there or something. That's interesting. On a stock, do you look for good financials and low multiples? It's not always a low multiple. Sometimes a low like forward multiple if I do my own little calculation. But yeah, I do try and I don't love buying super pricey stocks. Like as much as like SoFi is a great example. SoFi, Robinhood, great, phenomenal financials. Palantir too, just too expensive valuation. I do take valuation into consideration when I'm buying a stock. But honestly, but for some reason, like Amphenol right here, like some stocks, like I don't even mind like buying at their current valuations because they're so quality. Like in the long, like Google, Amazon, some of these names, you don't mind buying them at all-time highs because they're like in the long run, like it won't matter because they'll just be so much higher in stock price. Like sometimes it's worth it to buy it at all-time highs or something. How about Cameco? Oh, hey, Cameco. Is that CCJ? This is my number one favorite uranium stock by far. So if you're looking for the best uranium stock, I would recommend Cameco. But the forward PE is, of course, expensive, of 59. But this really is my favorite uranium play. You can look at the uranium ETF, ticker symbol URA, the uranium ETF, and the number one holding in here is Cameco. So it's 22% of the whole ETF. Honestly, a more diversified play would maybe just buy URA, and the number one holding in here is still Cameco. But I don't love the other holdings, like they got Oklo. So it's kind of like a pick and choose. I'd pick and choose my nuclear play. LEU is phenomenal. UEC is decent. CCJ is the best. Hey, Isaiah, good to see you, man. He says ODC. Good to see you, man. Hope you're having a great day. And then we'll check out, Ion Energy Transfer. That's another, they're actually the natural gas pipeline company. They own like 40,000 miles of natural gas pipelines. That's why they're an MLP. If you're an MLP, the requirements are you have to have most of your assets are pipelines, natural gas pipelines. AVGO could be a bargainer now. Hey, we'll check out Broadcom. Yeah, let's do Broadcom after this. What up, Two Trick? SLRR. Yeah, we'll check out all these. So here's Oil Dree Company of America. Here's like another one, a smaller market cap. They're only worth $740 million. So $740 million. What's the forward PE? There is no forward PE. So I guess they're expected to lose net income next, or maybe there's just no analyst covering it. So that's why there's no forward PE. It's just such a small company that no analysts cover it. But this is good net income. I mean, for the market cap, of course, they're easily making 10 to 15 mil in net income a quarter. Sales did fall 5.9% year over year, but that's kind of the whole industry with natural gas and oil right now. Do they pay a dividend? You do. You get a 1.6% dividend, 16% payout ratio. So it looks like retail and wholesale products, business to business products group. So it looks like a smaller oil and gas play, 700 mil market cap, trading at 13, 14 PE. The Venture Global company was at like a 5 forward PE. So let's check out Broadcom. They report. I actually have not even looked at Broadcom because they're almost definitely they're still crazy expensive even after this. The stock price like they fell 11%, but they're the same price as they were like well, not even a month ago. But let's see, what's the forward multiple? So yeah, 45 forward PE. The current PE is a 75. The forward PE is a 45. Let's see what they reported. AI backlog exceeds expectations. Um, you know what? Let's go see what the earnings hub is because that's what I like. I like reading the AI overview. So semiconductor solutions surged 74% year over year, fueled by AI growth and AI related revenue. Infrastructure software grew 19%, supported by the increase in VMware adoption. Operating income rose 35%. Well, let's see. Yeah, so a lot of people know them for their semiconductor solutions, but one of my favorite businesses is their software business right here. Like they did some acquisition back here where like ever since then, like the revenue used to just be like 2 bill a quarter. Now it's just like been up and up and up. You know, kind of see the difference how it just bumped up there to 20 billion a year annually. So they print free cash flow. Well, let's see. So they beat on revenue. They beat on EPS and they beat on EBITDA. It was a triple beat quarter. What was the free cash flow this quarter? Wow, 7.5 bill of free cash flow, up 36%. Like they're doing 5 to 7 billion of free cash flow a quarter. Then, well, let's see what the net income was. The net income grew 55%. The growth is so good. They certainly deserve a 45 forward multiple. They're expanding margins. They're printing net income. They have a great yield too. I think you get 0.67% dividend yield. So it might be a little too expensive to buy right now, but it's one that I do like a lot. It might even be like better than Nvidia. I don't know. Cake stock. What's your opinion on copper? Well, copper the commodity, and I think silver, dude, went crazy on Friday. But my favorite copper play is actually Amphenol. Um, is they actually they turn the copper into cables and stuff and can sell it for way higher price than just commodity of copper in there. So I like Amphenol as a copper play. They supply NVIDIA uh, copper cables for their NVLink spine product that uses 2 miles of copper cables. Cake. Let's do cake. You know, sadly, nothing's too great here. I do not sadly expect this company to outperform the S&P 500. So yeah, actually, this stock is the same price that it was in 2015. So you bought the stock a decade ago. It's the same price that it is today, and it's because the growth is kind of gone, and it's the whole industry right now. So I'm not just picking on Cheesecake. Cheesecake has actually done a lot better than like all their competitors. Well, actually, no, but well, check this out. If we go to the Cheesecake Factory restaurants, you know, even after opening up new stores and stuff, look at the growth in the middle here. 0.5, 0.9, 0.7, 1, 3, 3, 1. These do not beat inflation. So yeah, it's still positive, but that doesn't beat inflation. So that's just not great. They still make good net income. If we go down here, like they're making 30 to 50 mil a net income a quarter, and you get a dividend, a 2% dividend. But let me actually check out Chili's. EAT, it's kind of a competitor. They own Chili's, right? Yeah, here's Chili's right here. That's actually cool. That stock has actually been doing quite. That was actually an exception. What is it? Darden Restaurants? Is it DRN? It's DRI, I think. Yeah, here's Darden Restaurants right here. I guess another kind of competitor to the Cheesecake Factory would be like an Olive Garden. And here's the company that owns Olive Garden and Longhorn Steakhouse. Their stock has been doing pretty decent. Ooh, Texas Roadhouse, dude. Texas Roadhouse is the one you want. If you're looking for one to diamond hand, that'll almost probably have more growth. I think in the future, best management is like a Texas Roadhouse. But look at some of the other restaurants right now. Like if we look at Wendy's, this is so sad. Wendy's is at basically an all-time low. Wendy's is at like an all-time low. Jack in the Box, Krispy Kreme, they're all struggling right now. So McDonald's, Yum Brands, these are all cool ones. Nebius stock, still too high to enter. Qualcomm going into GPUs could be a good bet. Yeah, Qualcomm prints royalty money from their patents. Let's do Nebius. You know what? Nebius, because this one actually is owned by NVIDIA. If we head over down here to, actually, I'm in the wrong thing right here. If we go over to the NVIDIA portfolio, you know, NVIDIA is so big that they own some individual names. You know, they own CoreWeave, APOD, and they also own Nebius. You know, CoreWeave, APOD, and Nebius, they're all the exact same thing. They all just own a bunch of GPUs and data centers, but they've been getting massive deals from cloud service cloud service providers like Microsoft looking to put some of their Microsoft Azure cloud on Nebius's servers because Microsoft doesn't want to take on that liability themselves. And actually, $17 billion of the Microsoft cloud is going onto Nebius's servers. Let's see what this is right here. Nebius launches robotics and physical AI awards with 1.5 million in compute credits. Oh, okay. Well, let's go look at their numbers down here because this is kind of what matters. Check out the growth that this is, by the way, a European company. I think they're headquartered in the Netherlands. But check out the revenue. Literally went from 32 million to 150 million in revenue year over year. A massive increase in revenue. And check out what they're expecting in 2 quarters. They're expecting the revenue to be 469 million. So massive expectations of the revenue to grow, but sadly, they're still just losing a lot of money. They're still losing over 100 mil a quarter, and analysts aren't really expecting them to narrow those losses anytime soon. Or I guess in 2 quarters, they're only supposed to lose 66 million as the top line growth. So anyway, I'd be careful with Nebius. In the long run, they're kind of the bag holders. I still believe in Wendy's, yo. They're not the same business model as like a McDonald's. You actually want to see something crazy. Boring Mickey D's McDonald's. Check out this stock price right here. It actually looks beautiful on the weekly chart. So if anyone, I don't do technical analysis really, but I mean, it just looks like it's going higher. I mean, actually, McDonald's literally has one of the best charts of any blue chip I've legit just ever seen. And this is a stock that's just going to give you 7% of your money back here. Huge, completely different business model than like a Wendy's. And look at Wendy's stock. This is so sad. So we just saw McDonald's. Look at Wendy's stock, though. Zoinks. 2 completely different business models. What does McDonald's do? Well, McDonald's is actually a real estate and royalty company. McDonald's owns the land under 80% of all the stores, and even in a recession, they still collect rent every month from the tenants and over market prices on rent too that they can charge. And they also, if you go spend $100 at any McDonald's, they keep $4 of that money goes back to this company, the corporation, as a royalty. They call it a sales and marketing royalty because McDonald's, the parent company, runs a bunch of advertisements and all the, of course, franchises benefit. So that's why they pay back some of the money. And they don't mind doing it either because I wouldn't want to start my own fast food restaurant, but I'd pick a McDonald's franchise. And anyway, and we get a dividend, a $32 dividend we got coming in. So anyway, I kind of ranted off about McDonald's right there. But yeah, because they're really a real estate royalty company that actually does good in a recession. Historically in a recession, McDonald's sales go up. People stop going from like Starbucks and Chick-fil-A and Texas Roadhouse and they go to McDonald's. And in a recession, McDonald's buys and acquires a bunch of cheap land. So, all right. Let's see. ARM stock. Yo, James, what up, dude? ARM is actually another royalty company. They're actually in my hidden gem watch list right here. I have a lot of cool stocks in here. Some of these I already own, like Comfort Systems, but Welltower is a cool one. But ARM right here, they're making these energy efficient chips. And if we go to where the revenue actually comes from, I think this is pretty cool. Let me know what you think. But 60% of the revenue is actually their royalty revenue. And then the other half of the business is their licensing revenue. So basically, they just collect a bunch of royalties. So if you go to the gross margins, they literally have a basically 100% gross margin because of how they get their money. So I actually have ARM on the watch list. They're still too expensive. Like I love that they had this 3.9% dip. I promise you, I will love to own ARM at like $100 a share. But the forward PE is 120. 120 is ridiculous, but they certainly deserve a high multiple, but I can't pay it yet. What app is that? Yeah, hey, actually, this is my favorite app to buy stocks on. It's a brokerage. If you want to get this app, it's in the link tree in my bio, the very first link there. A lot of people buy stocks in here, and they just keep their idle cash in here. If you look at them on my screen, you get like a 3.35% APY on your idle cash. But yeah, anyway, if you want to get it, it's in the link tree in my bio, very first link there. It's an affiliate link, so if you go and deposit $100, we'll both get like some free stocks. But you can just hop into Google, or just a brokerage called Moomoo. What's royalty revenue? Basically just 100% margin revenue that they receive. It's so cool to see like who doesn't want royalties, So the same with McDonald's, basically just collect royalty streams. Oracle is let's go look at Oracle because what did they report? Let's go see what they reported. So cloud business reached $8 billion, growing 34%. This is like your pure cloud play. In my opinion, I would, if I wanted cloud exposure, I would just pick Amazon or Google. They trade at way lower valuations and way less leverage. Obviously, Google and Amazon are like a pure cloud play. Even Microsoft, they even pick Microsoft. Oracle has like a 5.8% market share. Google Cloud's ahead of them in market share. AWS is the number one market share, and Azure Cloud's ahead of them. But they have so much backlog of like future growth expecting. So it looks like their legacy software revenue declined 5% year over year, offsetting cloud gains, contributing to a slight revenue miss. Operating cash flow improved. Well, let's see here. What's the forward multiple on an Oracle? A 35. Oh, wow. So look at this. Their current PE is a 35.7, but the forward PE is a 35.8. So they're expecting no net income growth the next year. Did they have a one-time adjustment to their net income? They did. So they didn't actually make $6.1 billion. They really made around $4.8 billion of net income this quarter because this is the before-tax number. Actually, they're usually paying like $700 million in total expenses. So really, they made around like $4.5 billion, which is still a record net income for them. It's because if we look at their we're not going to have the chart here, but they have like a huge backlog of orders. Wow, the revenue growth is supposed to be $19 billion. But look at that's weird that net income. I don't know about Oracle. It's starting to get somewhat attractive. But yeah, it's like a pure cloud play. I know like the TikTok servers are now on Oracle's servers. Yes, Oracle failed in fake numbers, but maybe priced into the stock. Yeah, maybe it's all exactly. They've been smacked down so hard. Oracle's also, here's another bad thing about Oracle. They have a ton of debt, like a lot of debt to pay. Or actually, let's go look at they just issued more with another bond as well. So it's even higher than this. But their long-term debt is now, look at that, quarter over quarter, we're from 82 to 99.9 billion. So, and this is the bad stuff, the long-term debt, not even including like your capital lease obligations or your current debt either. But just long-term debt, the nasty stuff, they got $99 billion of debt to pay. And here's the net income. They're making this quarter was $4.8 billion. So they're making, we'll be generous. They're making $4 billion in net income a quarter. But a lot of that net income does get eaten to the dividend because they pay a dividend. It costs $1.44 billion of money a quarter. So basically subtract half from their net income, and they diluted you by $1 billion. So they're not doing any buybacks, huh? I don't know. I just don't. There is good news though, because like their cloud backlog is literally like surged 300%, but BYD, let me know which one you're talking about, BYD Gaming or BYD the car company. BYD is basically like your China manufacturer play. I mean, they can just print out these Chinese cars for so cheap, and if we did not have tariffs against them, they'd be all over the U.S. because they're cheap and they're freaking good, quite frankly. But we have tariffs on them. We can't allow Chinese cars because we need our car businesses to do good. But their BYD is now being let into like Europe, for example. They make literally a great car for $10,000 USD. That's like, you'd think it'd be crap, but it's not too crap, but and this is in USD. They're actually making more net income than Tesla is to the bottom line. And you get a 1.5% dividend. They are a Chinese company, of course, but yeah, it's some Chinese EV car play. I want to make it short. They literally have a factory you wouldn't believe. Like their BYD car factory is like bigger than like I forgot, it was bigger than like a state in the US or something. Like it's huge. I want to almost pull it up, but I can't. I don't think I'll find it quick enough for it to even matter. Do you trade options? I actually do not really. I haven't done a single option in over a year. I don't really do crypto either. I'm so boring. I mainly just diamond hand, buy and hold stocks for the long run. Justin said IMPP and Crocs. You know what? Maybe we'll check out Crocs. They're in France in a big way. Yeah. So here's Imperial Petroleum, very small market cap. They're worth $180 million, but they're trading at 4 times net income. Let's go look at that. So where are they headquartered? They're headquartered in Greece. So they're headquartered in Greece and they might not pay taxes. Well, let's see. So yeah, they don't pay taxes. And here's their net income. Revenue is $41 million and they netted $10 million. Yeah, look at it. The operating profit and then the net income slightly higher than the operating profit. They don't pay taxes. Yeah, that's horrible. Anyway, actually, this is a great balance sheet. Look at this balance sheet right here. They have $99 million cash. They must be making interest on their cash too, because yeah, they are actually making the lowest quarter this quarter, but they're making interest on their cash, which is interesting. I don't know. Again, very small company, headquartered in Greece. Not one you'd probably want to trust with any meaningful amount of money, but maybe worth putting in like a small amount of. It's a cool picture. Um, Maybe it's worth. Maybe they own some oil rigs or something. But international. Oh, it's a shipping transportation company specialized in transportation of various petroleum and chemical products liquefied. So they might be the shipping company, has a fleet of 3 medium range product tankers. So this company owns 3 tankers, and these are how much the 3 tankers are making in money. Interesting there. I don't know about that one too much. Hopefully that was helpful. What site is this? Yeah, hey, actually, this is a brokerage where you buy stocks on. My favorite one. If you want to get this app or software, it's in the link tree in my bio, the very first link there. It's an affiliate link, full disclosure. So if you go and like deposit $100, we'll both get some free stocks. But yeah, my favorite app to buy stocks on, and it has the most useful analysis tools. And costs nothing. It's free. No fees or anything. That's why I use it. Actually, by the way, all these brokerages are all in the link tree in my bio, like Robinhood as well. Second link in the link tree, Weeble's third. But Moomoo just happens to be my favorite. It's free, lowest cost, and most useful, I think. And if you look in the middle of my screen, a lot of people just like it for the idle APY. You get a 3.35% APY on your idle cash and stuff. You look into Copart. Hey, what's the ticker symbol for Copart? Check out Prim. Hey, Primrose, right? Or Primroyce. Or check out Powell. Hey, Eric, what's up? Do you mean Powell Industries? Maybe we'll check that one out. Does it work outside of the USA? Oh, this brokerage? I'm not sure, actually. Some countries it doesn't work in to get this app. But this app is available in US, Canada, and maybe Europe. I don't know. Anyway, here's Primrose right here. A very fair valuation, a 24 forward PE. Even after this monster stock price appreciation, like this is the kind of stock, in my opinion, that's just going to continue to climb higher, safe dividend. They're an energy and utility company. Let's see. Wow, they've been beating like crazy on their expectations. This quarter, analysts expected 1.84. They did 2.17. Massive beat on revenue. Massive beat on EPS too. They expected $1.20. They did $1.70 and an EBITDA. So it really was triple B quarter. $100 million net income this quarter, and that's really real. They netted $100 million net income. Sales are up 32, net income's up 61. So they're also expanding margins. 4% net margin industry. It's a holding company, engages provision of construction, fabrication, maintenance, replacement, and engineering services. Utility segment, telecommunication and installation, new and existing natural gas and electric utility systems. Anyway, interesting name there. They're actually on my watch list too. What was that stock I wanted to look at there? Hey, LOWK or Loke, thanks for that gift there. He says, have you heard about the SpaceX IPO? Any good space stocks you like? Hey, thanks for that, Loke. I'm about to say something very cool. I bet no one knew this. This is so cool. So SpaceX is going to IPO in 2026 at a 1.6 trillion valuation. Fun fact, did you know Alphabet, which is Google, so Google stock, owns literally 7.5% of SpaceX. So my exposure to SpaceX and space companies is via Google and via Amazon. Like Amazon literally just last week launched like 14 new Kuiper satellites into space as well. So Amazon and Comcast launched Luna Cloud Gaming. Amazon settles Italian tax and labor probe. Well, anyway, Amazon, whoa, this actually sent Instacart down. Amazon expands same-day grocery delivery to over 2,300 U.S. cities. The second that news dropped, I kid you not, think about that. You don't want Amazon as your competition. Instacart, which basically does same-day delivery of your groceries, tanked on that news. So Amazon's an ETF and one to never sell. So no. Besides that, there's no other space stocks I really like that are nowhere near in the realm of like Rocket Lab, ASTS. Like I like Rocket Lab and I like ASTS, but they're super, super unrealistically expensive for me to trust. But yeah. Okay. Oh, Crocs. Hey, we'll get to Crocs after this. We'll get to CPRT, Copart, and then we'll get to Crocs. And we'll look at a few more here, then I got to run. But yeah, if you guys wanted to follow me, we stream every day. So yeah, here's Copart. It might sound nothing. I have no course book. I'll never follow you, DM you. No way. There's no way to support me unless you want to hit the follow button or hit the like button. I appreciate that. So yeah, anyway, here's Copart right here. 23 forward multiple on this company. Let's go see, like, look at that. They've been struggling hard in terms of stock price appreciation. Are they missing on expectations? So yeah, that's it. Look at this right here. The orange lines what the analysts expected for the past 3 quarters. They've missed on their revenue every quarter. You know, the revenue, the sales, the lifeblood of the company. You don't want to be missing on your top line. So they've missed on the top line for the past 3 quarters. But the margins have been holding strong. Like, check this out. So yeah, the revenue is only up 0.7, but the profits are up by 5.9. So they're still able to hold up their margins. Whoa, a great balance sheet. Like, that takes a lot of risk off the table. They have $5.25 billion of cash on hand and no debt. And whenever you have such a high net cash position, these companies are putting their cash into these 1 to 3 week treasuries and earning interest on them. They literally made from interest on their cash $53 million. That's the benefit of having, so much net cash. That's a great balance sheet for real. So that actually might be propping up their operating, or well, actually no, because the operating profit doesn't include the interest, but the net income does. So that helps. So anyway, we kind of just want to see the growth come back to the top line because they've been missing on top line growth expectations, but bottom line's still great. And what's the forward multiple? A 23. That's a fair multiple. 23 PE, all that negative growth might be priced in at this point. So, we'll put them on the watch list, maybe nibble on them. Maybe don't full size position it yet, but maybe do a nibble on that one. Yeah. Hey, Eric, did you want me to look at Powell Industries, or what do you mean? Check out Powell, because Powell has 2 L's. Yeah. Powell Industries is a phenomenal company, I think. Tough to buy it here though. I just sold on my ASTS. Yeah, hey, that one, these are like momentum stocks. You probably sold it for a good little profit there. I wouldn't be shocked to maybe see this one continue to do good, but in the long run, I do think like this is hard to trust or diluting you. But they just got their first ever amount of sales. But yeah, yeah, is crypto Coinbase an okay platform? Or I haven't used them before. Oh, dude, Crocs. I keep forgetting. My bad on that one. I don't know how I keep forgetting about Crocs. So, they sell a commodity. They sell shoes. So what's the multiple? A 7. So they trade at 7.4 times forward net income. Their current valuation is a 31. So something happened to their net income. Let's see here. Oh, so look at last quarter. They lost $8. That must have been a one-time adjustment. So yeah, look at this. Last quarter says they lost $490 million in net income. Well, they didn't actually. The business made $310 million, but that's not good. That's actually terrible. This most recent quarter specifically. So if we look at the revenue, the sales declined 6.2%. So the sales are down 6.2 and the profits declined by 23. And then, the net income fell by 27% year over year. So the margins just got crushed. And it might be from the Hey Dude brand, So they own Crocs and they own Hey Dude, and they've just been on a nasty little decline. Yeah, dang, look at that. Negative 21% year over year after it fell 17%, after it fell 8%. So they're on a nasty. Hey Dude isn't doing so well. What about Crocs, though? Crocs brand, that one also just went negative year over year. So, but here's the good news. Like, the forward PE is a 7.5. They do a lot of share buybacks. Just the growth. I'd be careful with that one. Nike's also struggling really hard. I actually completely sold out of Nike. Look at Nike stock. They're the same price as they were. Dang, Nike's the same price that they were back in 2015. So you bought the stock a decade ago. It's the same price that it is today. I did sell out of my Nike. What website are you using? Yeah, hey, what's up, man? If you want to get this app I'm on, by the way, this is actually a brokerage software where you buy stocks on. It's in the link tree in my bio, the very first link there. It's an affiliate link too, so if you go and deposit $100, it both get some free stocks. But yeah, my favorite app to do analysis on, you can get the Warren Buffett tracker, Pelosi tracker. It's all free brokerage, costs nothing, no commissions. But if you do deposit $100, it both get a little fractional share. A lot of people like it for the idle APY on your cash and stuff. All right, so if you want exposure to space telecom infrastructure, you can buy some Google, SpaceX, and T-Mobile. Yeah, actually, I was reading an article. T-Mobile actually is in the not in a great position. Like SpaceX got the great of a deal from T-Mobile, and T-Mobile got the badder hand of the deal where they lose the rights and stuff to it. Let's see what this is. T-Mobile announces 15 billion share buyback program. That's cool. Um, so I actually love T-Mobile though. This is a great stock to buy, never sell. An 18 forward PE, not really expecting too much net income growth. I love Mint Mobile, Ryan Reynolds ads, those are genius. But yeah, T-Mobile does insane share buybacks and insane dividends too. You get a 2% yield and like 6% in share buybacks. It's crazy. Really is crazy. Hey, what up, Hervey or Hervem? How's it going? Yeah, hey, Law and Siren. Yeah, actually, here, if you're on the YouTube stream and you want to get this app, it's actually in the link in the description. But if you're on the TikTok stream, because I'm streaming on 2 different platforms. By the way, if you want to support me, the best way to support me is actually just watch the stream from YouTube. Trying to build up my YouTube viewers. But yeah, if you're on TikTok, link to my bio, YouTube, link in the description. Okay. Novo Nordisk, you know what? In here, I'll show you some other cool features that's kind of built into this app right here. Like there's so much like I don't show. You can see like the analyst ratings right here, like the individual analyst, and you can see their actual star ratings. Some analysts have like a terrible star rating, and you can read the Morningstar research, which is cool. You can read like what are the bulls saying, what are the bears saying, So yeah, Wegovy had a slow launch due to supply cranes and Zepbound. Yeah, Zepbound is insane by Eli Lilly. But yeah, if you're wondering what is Novo Nordisk, this is your weight loss play. They own Ozempic and they own Wegovy. And so their diabetes and obesity care products are 93% of the entire business. So like a pure weight loss play. And sadly, one of the reasons why the multiple is collapsing, and this is the sad truth, that they might deserve to be at a 13 PE and might be slightly pricey here. They actually lose their exclusivity for Ozempic. Like they lose their patent for Ozempic in literally 3 years, which is very unfortunate. And they've been missing on expectations. Like look at this quarter right here. The most recent one, analysts expected 12.1 billion. They only reported 11.7 and the margins fell. So look at this. The revenue grew 10% year over year. But the net income, the operating part, their net income really did fall by 22% year over year. So the margins are being squeezed. Net margin went from 38 to 26 because they agreed to cut the prices by well over 50% in many different places. Novo Nordisk launches Ozempic in India at $24 per week. In the $24, bro, in the US, they just announced it for Medicare. It was like a way more than 50% reduction, but on Medicare and Medicaid, for $149 a month, you can get Ozempic. But like they're cutting prices, they're losing exclusivity. So it might be a stock that sadly deserves to be around this 14 PE. It might be fair. But you get a nice yield, a 3.6% yield. It's unfortunate for Novo Nordisk. Yeah, I wouldn't buy Verizon or AT&T. T-Mobile is the best one, Well, these just don't really grow. Like look at AT&T, for example. AT&T is literally the same stock price that it was in 1997. The TELUS Canadian one is also trash. Verizon too. Here's Verizon. You're buying these to maximize your dividend income. Verizon is literally the same price that it was in 1997. But you get the high yield, but I mean, these just don't outperform the S&P 500, but I think T-Mobile will. Very interested. Hey, what up? What's your take on Tesla? What's some good stocks to buy now? Hey, yeah, so here's some stocks that I think are decent buys right now. I went over this in the very beginning of the stream, and now that we're at the very end, I can kind of go over them again. Oh, here, I just want to hopefully introduce you guys to some new stocks. This is the one I really want to go over, but I actually just bought this company right here, ticker symbol SO in my Webull portfolio. This is Southern Company. I'm barely down on them because I just bought them, but this is a regulated utility with a 3.5% dividend, and you also should get like 3% plus in stock price appreciation every year. So this should just give you around 7 to 8% of your money back every year. These regulated utilities literally always do that, and the state government literally guarantees them some returns if they don't get all the returns as they get. But on the cap side, since they're regulated, they can't get over like a 10% return a year in terms of raise prices without approval. So anyway, you can even just check out the ETF right here, the VPU ETF. Southern Company's like the third largest holding. This will literally just return you probably just always return you 7% of your money back every year. So yeah, they got NextEra Energy. I own Constellation Energy and Southern Company. Those are my top utility picks. But let's look at some more niche companies now. This is Otis Worldwide. It's actually a pretty fascinating stock right here. If you're wondering what this company does, they're like the only publicly traded escalator play. 70% of the revenue comes from servicing escalators. Like the Eiffel Tower is one of their customers. A bunch of hotels are customers. And you get a 1.84% dividend. Look at that dividend growth. They can afford it too. And they're making crazy 400 million in net income a quarter. So it's just an interesting name that I didn't know existed. I put them on the watch list. I don't own them or anything. So Southern Company and AutoZone started to get very fair at a 22 forward multiple. They respond to recessions differently. In a recession, people buy off buying a new car and they work and spend more money on their old cars. And even in a recession, your battery, car, whatever goes, you got to get that fixed. Yeah, SO is a cool one. Pinduoduo. I haven't looked at this stock in years. So here's Pinduoduo. This is the company that owns Temu. So have you heard of Temu before? They had a Super Bowl commercial. This is them publicly traded. They were responding to they've been taking advantage of this loophole where if you send under $300 worth of stuff, it's called a souvenir tax, or you don't get taxed if it's under $300, which they consider a souvenir or something. So they've been purposely sending all their packages under $300 and the government came after them, but then they delayed it. So anyway, it's basically your Chinese Amazon. Let's see what their active users are. They make money. They got 750 million monthly active users. Their active customers or annual active customers are 881 million. And this is, we've converted the currency. This is a Chinese company. We'll convert it from Chinese yen to US or won, to USD. They're printing easily 2 to 4 billion of USD after tax net income a quarter. Well, it looks like they're making a lot of interest on their cash. Yeah, they pay a dividend. No dividend, but that's all right. Yeah, I'd probably rather own Amazon. Can you check ASML? Yeah, let's do ASML. Yo, we looked at the trade desk earlier. We'll look at them again. Sadly, I have nothing good to say about them. Amazon is eating their lunch, and trade desk is still expensive, even after their massive decline. But we'll check them out after this. So here's ASML Holdings. This is the forward PE is a 36. So this is your lithography play. They literally make the chip making machines. Their main customers they only have 3 customers. It's Intel, Samsung, and Taiwan Semi, I think, or Nvidia. So let's see right here. Net income. Yeah, this is great. This is a European company, so we'll convert it from euros to USD. And hey, Nick Stamper, no way, dude. Thanks for all those gifts there. I do appreciate that, man. HYMC next. Yeah, hey, sorry. We'll get to HYMC. Remind me. Thanks for those gifts. I do appreciate that. My bad. So yeah, they're easily doing 2 to 3 billion of net income every quarter. Let's see. Does AI have anything to say about this stock? Revenue was 7.5 billion, fell short of consensus due to weaker China sales and timing of delivery. Gross margin at the high end of guidance. Net bookings totaled 5.4 billion with 3.6 billion from EUV systems. Cool. And since they're a European company, they change their dividend every quarter. It's you never know what you're gonna get. Yeah, you get a 1% dividend there with ASML or 0.7. Yeah, so they did slightly miss on the revenue this quarter, but the stock is still just done great nonetheless, maybe on the booking backlog. Any news down here? Nope. So yeah, anyway, ASML, incredibly complicated machines. The Chinese were trying, they're not a US company, they're a European company, I think headquartered in Switzerland, but the Chinese were their technology is so good that the Chinese were trying to steal it, but the US Army and the US literal government came in to defend ASML because we want to protect that technology for ourselves. And actually, China ended up stealing a $300 million machine from ASML, and even trying to reverse engineer it, they couldn't. There's so much it's the most incredible, the Netherlands, okay. The most crazy technology you've ever seen. So what was this one? HYMC. Hycoft Mining, it's a silver mining company. So yeah, if you look at the price of silver, it was up 5% on Friday. It was crazy. And same with this stock right here, it was up 8%. Now, I don't love the precious metal plays in the long run, but I've been wrong about these precious metals because look at this. This play has done insanely well. You got to be up a crazy amount on that one. But Like, did you know like the whole entire market for silver? If you owned all the silver in the world, okay, let's say you got all the silver in the world, you have it, and all the copper in the world. You own all the copper and silver in the world. At current valuation is still less than the market cap of Google. Even those two markets combined, silver and copper, but these precious metals do good as like your safe haven assets. You know, the Fed just turned on the money printer again. They're printing like 60 bill a month. And as soon as the market kind of sniffed that out, the metals have been going up. You know, other currencies and other nations like BRICS are using precious metals to back their currency and stuff. But anyway, yeah, the revenue is terrible. Oh, wow. So they don't actually have revenue right now, but I guess it's the value of their silver and the silver mine while they're bumping up so much. Can we talk about copper? You know, I don't really love copper or silver, but best copper stock in my opinion. It's not a copper mining company, but they receive the copper and then turn it into cables and then sell them for a crazy margin. It's Amphenol stock, APH, my favorite copper play. I think they even categorize this one in copper. Let me see. No. Category. This should be. It's big. Okay. Anyway, Amphenol's cool. Which one? You can never go wrong with precious metals. Yeah, actually, gold is the number one precious metal. They're worth 25 trillion. The gold. This is the price of gold. IAUM. It's pretty much at an all-time high, or just IAU. IAUM is the lower expense ratio ETF of gold, and this is literally the commodity of gold in an ETF, and it's just at an all-time high. Gold's done crazy good, and silver. Axon, hey, what up, Nick? So Axon, this is an interesting company. There's not many, I don't think there's any like competition for this. This is your body camera play and taser play. They literally, like the whole UK police force uses Axon tasers and their body cams. Same with a lot of the US police stations is getting ever more popular. There's like a lot of First Amendment auditors and stuff. It's getting just ever so popular for police stations to get police to put these body cams on the people and put body cameras or these cameras in their cars as well. And then Axon's the people that provide that and the cloud software to store all that stuff. So Axon's been doing great in terms of top line growth, but the margins, it's so expensive. That's the thing that sucks about Axon. A 450 forward PE. You know, the current PE is 178. The forward PE is a 440. So the net income is supposed to fall by 30%. The profits are struggling. The net income went negative this quarter. It really did go negative. But I love the top line growth and I love the industry. It's just the valuation's too nutty on Axon, even after it's kind of big decline there. But I love them. Will ASML ever perform a forward split? I don't know. Oh yeah, I wanted to get to the trade desk real quick. So the trade desk right here, yeah, look at this. So the trade desk is at a new 52-week low, or actually multi-year low maybe. This is your TV, CTV advertising play. And they're not cheap. That's the thing. Even after this massive decline, they still traded a 41.6 PE. So they're basically trading at 42 times PE. When we were looking at this earlier, we were looking at kind of the bull case, bear case, and like Amazon's platform directly targets TTD's advertising space on the open internet, allows it to outcompete on price, pressuring margins on them. So actually, one great example is Netflix. Netflix used to go to the trade desk to find advertisers to put on their ad tier subscription. Now Netflix actually went over to Amazon because it's cheaper in the Roku partnership. So it's unfortunate and they're still expensive. That's the sad part. Like they make good net income. Like check this out down here, 100 million, nice growth rates, but they're still expensive, I think. And that's why I wouldn't probably buy the dip, or maybe I'd nibble. Like I'm sure a lot of this is priced in or it just keeps on going down, but I'd maybe nibble, but I'm just staying away from that one. Amazon is like obviously not a pure advertising CTV play, but Amazon's like literally cheaper. It might be a better play. I don't know. So that's unfortunate. Is REGN a sell? No, actually, I really like REGN because if you're wondering why did REGN go from 1,100 to $600, well, that's because they have this ILA product and another company actually infringed on the ILA patent, and so Regeneron took them to court, and the court said, oh, they didn't infringe on their patent, or like the patent expired or something. So now literally anyone can use this ILA product. And so those sales have been off a cliff. But that aside, they have this collaboration revenue. This has been growing very nicely. It's up 18%, 22, 20. Their other kind of, what's their other revenue right here? That's up 73. Libteo, whatever that is, nice growth rate. So we're kind of diversifying away from Isla. The Isla HD, I think, is growing actually. This is their higher dose version. It's only up 9%, but that's actually that's great growth. Anywho, I actually wouldn't sell Regeneron. They're at what's the multiple? I'm going to guess a 12. Oh, actually, no. Whoa. Okay. 21 forward PE. That might be, it's not a super great buy here, but I wouldn't sell out of that one actually. Wouldn't sell out on that one. Is Nvidia still a buy? You know, Nvidia's a tough buy. I'm a believer that S&P is going to still keep up, if not slightly outperform the S&P 500 in the long run. So you buy Nvidia now. Not financial advice. I'm definitely could be wrong, but you should still get 7 to 10% of your money back every year. But I think it's a tough double and tough diamond hand, because if you look in the top right, the market cap, Nvidia's worth $4.25 trillion. You know, for you to double your money, they have to be worth almost $9 trillion. It's just a tough double, and I see maybe an easier double in some of the AI beneficiaries, like a Comfort Systems, a Powell Industries, and Amphenol. I actually just bought another share of Amphenol on Friday. They're the ones supplying Nvidia with their copper cables for the NVLink spine product that uses 2 miles of copper cables. But Nvidia, here's why it's a great company. I mean, we can see. Oh yeah, they have here's their GPU market share, 24% market share. They have this automotive software that competes with Tesla, that any company can just basically pay NVIDIA and license from them. But check this out. This is the unbelievable part. If another company can pull this off, they deserve to be worth $4.2 trillion as well. The revenue on NVIDIA was $57 billion this quarter. So they made $57 billion in revenue, and they kept net income after paying taxes, $32 billion of it, literally a 56% net margin, you know, after they paid a couple billion of taxes. So it's like unbelievable. Like, here's the computer networking growth on NVIDIA. Like, they deserve all the hype on them. In 2020, this business was $3 billion. Literally in 2020, it was $3 billion. Now it's $116 billion for the fiscal 2025. Insane. And NVIDIA is so big also that they own some individual companies. Check this out. We can see, like, you know, Pelosi portfolio, Warren Buffett portfolio, and then there's the NVIDIA portfolio. NVIDIA, the company, the corporation, owns a big stake in CoreWeave, APLD, ARM, and Nebius, you know, WeRide. Some of these stocks, actually a lot of these, are only taking stakes into these companies because they're just buying NVIDIA chips with all the money they get. There's a bit of a circular kind of thing going on. And NVIDIA is probably just following right now from Oracle and the Broadcom shenanigans. You know, Broadcom and Oracle both are at current prices. I think both still aren't buying the dip on yet. Sadly, I think Oracle, like, if that's all the dip that's going to happen, it's not a good enough dip for me to even start the position on Oracle or Broadcom right now. I love both of them, but Broadcom would be the better buy. If I had to pick one, Broadcom's at like a 44 forward multiple. Okay. AV, hey, what up, Connor? So, Aero Environment, this one is on my watch list now. Yikes, they have had a nasty little decline. Oh, they reported earnings 2 days ago. I have not looked at them, so let's see what they were. They they beat on revenue, they beat on EPS, and they slight missed on EBITDA. So it was like a mixed bag, like a barely miss, but I've loved how growthy this company's sales are. Now, that analysts expected this, so it's not like unexpected, but 150% revenue growth, and all this triple-digit the past 2 quarters, the triple-digit growth has come from them buying a company. If we go to the cash and investing activities, they spent basically $1 billion the past 2 quarters buying a new company, buying a new asset, and that's, you know, why the balance sheet just monstered up higher as well. So I do wonder what that new asset or that one thing they acquired was. So it looks like this company's in autonomous systems, space, cyber, and directed energy industry is what it sounds like. It looks like they're in the ARC robotics ETF right there. Introducing, here's their website right here. It looks like they got autonomous systems, loitering munitions. So it looks like, yeah, a defense play for like, yeah, interesting there. Aero Environment. Thoughts on Uber? Is it a good time to buy? I actually think so. Uber's a great company. Can you tell me what platform this is? Hey, Luca, actually, if you want to get this platform, it's actually in the link tree in my bio, the very first link there. This is a brokerage where you buy stocks on. It's my favorite brokerage. It's in the link tree in my bio, very first link there. And full disclosure, it is an affiliate link. So if you go and deposit $100, we'll both actually get like 5 free stocks, I think. So we'll both get like some little benefit for it. But anyway, yeah, you can just type it into Google, a broker called Moomoo, my favorite one. So here's Uber. The forward PE is a 25. I think that's so fair. For Uber, that's a fair multiple. Now, one of the reasons why they tanked on this news exactly. Has anyone heard of Waymo before? Waymo is basically a competition to Uber. It's another autonomous it's an autonomous Uber, basically. It's like an Uber driver, but it's an Uber, but without the driver. But that's owned by Google. They now have over 450,000 weekly paying rides on Waymo, which is crazy. And on that news, Uber dropped 7% because it is real competition for them. But I don't care. Uber's still great. You see, this is a cool metric we get. This is their monthly active consumers. They have 189 million monthly active consumers versus the same time last year. It's 161 million. But you check out this net income. This was a one-time adjustment. They didn't actually make 6.6 billion, but they did make over $1 billion. Like, the growth rates have been great on Uber. That's why we're looking at the forward PE, not the current PE. It says their current valuation is a 10.9. It's not actually because of that one-time adjustment. It's actually a 25. But Uber at a 25 multiple is super fair, and they're printing free cash flow, easily over $2 billion in free cash flow, $1 billion in net income. And what is Uber doing with all that money? Because Uber doesn't pay a dividend. So what are they doing with all that money? They're taking stakes into other businesses. Like, if we go to Grab right here, ticker symbol Grab, the largest holding is actually Uber Tech. They own 13% of all the shares. And if you're wondering what is Grab, it's basically international Uber. They do the same thing Uber does, but internationally. So this gave Uber instant international diversification, which is genius. Grab is super popular in those other countries. It's killing the unmanned driving. Yeah. Hey, what up, Joe? TWG, Top Wealth Group. So we're not going to cover this company. If you look in the very top right, the market cap, we just don't cover these kind of stocks. This whole entire company is worth $6.5 million. I mean, this is a micro cap, a $6 million company at an all-time low. So, I mean, the numbers look decent. I mean, it looks like they have a good balance sheet. The revenue growth isn't there, -7. I just don't be so careful with that one. I don't know if I'd trust anything meaningful in that one, or I wouldn't. I own a few shares of Grab. Hey, nice, Jay. Taiwan Semi revenue. So market cap is unreal. So the price to sales. What's the price to sales on them? So the price to net income on Taiwan's a 30. The price to sales is a 13. The industry average is a 13.9. So there you go. Yeah, Taiwan Semi is a freaking monster of a company. They have a largest market share for these they make now these 2 nanometer wafer chips. Revenue's up 35, net income's up by 44. So that means they're expanding their margins. Net margin went from 43 to 46, which just, when you're doing, and this is in USD again, Taiwan company, but we've converted their currency to USD. 32 billion of revenue. They netted 14.8 billion. So they literally have basically a 50% net margin. The free cash flow is insane. They also have a high yield at over 1% dividend yield. Taiwan Semi is your fab. They actually just created their first ever Blackwell chip in their Phoenix fab in the US, because big fear here is, and why the US government's taking a 10% stake in Intel is, all our NVIDIA chips, number one company, all their stuff is being manufactured 6 feet away from China and Taiwan, but they just opened up their Phoenix fab to produce chips there. We need to be more manufacturing independent. And also, NVIDIA is moving a little bit of their manufacturing to Intel just to support them. Yo, Danny, what up, man? Hope you're having a great day. I'm doing good. How about you? Is the Mag 7 still a good buy? Most of the Mag 7, I mean, like Meta, Amazon, Google, Microsoft are all good buys here. Tesla. Oh, even NVIDIA's a good deal. I don't know about Tesla and Apple, but Lucid, that one's not too. This is a stock that sadly deserves to be at all-time lows. Like, I don't know who's buying this besides, traders. If you buy this stock with solely the intention to swing trade it, some sort of short-term thing, there's no scenario where you really want to diamond hand this one, because in the long run, sadly, this is just going to continue to slowly keep on hitting all-time lows. I've been saying this since like 2023. Like, this is the kind of company that's just going to continue to hit newer and newer all-time and all-time lows. They just lose so much money, dilute the life out of you. Like, this is never a stock you'd want to own, just from a pure financial point of view. And its financials explain why the stock is at an all-time low. Like, financials always matter in the long run. It explains why NVIDIA and Palantir are at an all-time high, and Lucid at an all-time low. So remember, the whole company is worth $4 billion. So let's say you buy the whole company, you pay Lucid $4 billion. Here's what you're buying. You're buying a business that literally just this quarter lost you $1 billion. So that's already 25% of your investment, the whole market cap just gone instantly. The quarter before they lost 500 mil, 400 mil, 400 mil, $1 billion, 600 mil. Like, just for all of eternity, this company loses an insane amount of net income. And that's the same thing with Rivian. Like, I wouldn't buy Rivian either. Rivian also is in the same boat. And they're leveraging up. Like, look, the liabilities used to be 68% of the assets. Now it's 79% of the assets. And they're issuing shares. Wait, does that say Uber? Wow, this is new. This is new news. Uber Technology owns 4.2% of the company. Oh yeah, Uber and Lucid went to some sort of partnership a while back. Anywho, wouldn't buy them though. That sucks. Just like too much net income losses. Did you do Oracle? We did do Oracle. Arista Networks. That's they're expensive, but they print net income. 42 forward PE on Arista Networks. They make like these antennas and stuff. Well, let's see right here. What does the earnings hub have to say? Product revenue grew 25, reflecting robust demand for AI solutions. Service revenue increased 40%. That's great. So check this out. This is always what I've loved about them. This is their after-tax net income a quarter. Like, look, the operating profit's 980, but the after-tax net, because the operating profit doesn't include the taxes, they netted $850 million in net income this quarter, and they're doing that every quarter. And at this growth rate, it's going to be $1 billion of net income a quarter very soon. So investing a bunch into the future, I really like all these numbers. Like, this is like a pure growth name right here, pure AI beneficiary. It's expensive though, 42 forward PE. That makes Amphenol look like a steal. And actually, hey, I actually just bought a share of Amphenol on the dip on Friday. But pretty cool name there. Great numbers. Grab and Dash might be a steal. Actually, I like Dash is more expensive, but Uber's a steal, man. I just like Uber. Uber's a good one. It's like the safest, biggest name there. Actually, DoorDash has a partnership with McDonald's. So look at Uber. Chipotle, they had a nice little rally on Friday. They're up 3.6%. A lot of the food stocks, like McDonald's, pretty much at an all-time high. Chipotle Grill opens 4,000th restaurant. That's pretty cool. Their 4,000th restaurant. The company plans to open 315 restaurants in 2025 and 350 to 370 in 2026, including international expansions. Chipotle aims to reach 7,000 locations in the US and Canada for the long term. Well, here's the bad news about Chipotle. Here's why they have been, every time they report earnings, they gap down. Like, look at this. Massive gap down on earnings. Massive gap down on earnings. For the past couple quarters, every time they report earnings, they've been missing on all expectations, and this company's always had a high multiple. Now the multiple's starting to get somewhat fair, a 31 or basically a 32 PE is expensive. But here's the thing. If we go to the analyst expectations right here, the orange line, for the past 3 quarters, Chipotle has actually been missing on revenue. Even when opening new stores, and their average ticket price is going down and stuff, but they've been missing on the revenue, which is why they deserve to really gap down so much on earnings. And I remember watching this, like, they gap down on earnings, then they just continue to slow bleed down. And but anyway, 32 forward PE. Actually, what's the forward PE on Chipotle? A 31, it's right now is a 31.9. There's not much EPS growth expected, and that's if they beat on the expectations because they have been slightly missing. But Chipotle is in the best position. Now, I'm not just picking out Chipotle because all the restaurants are doing terrible. Not all of them, but like Wendy's. But look at Chipotle. The revenue, the sales grew 7.5. The sales are up 7.5, but the net income declined by 1.3. Last quarter declined by 4.2. So what does that mean? It means their net margins are getting crushed. Input cost, labor cost, it's all hurting them at all the restaurants now. Like Wendy's, for example. Look at Wendy's. It's not just them. Like, obviously not the same kind of restaurant, but Wendy's is at an all-time low right now. Like a Jack in the Box. A Jack in the Box is at an all-time low right now, or 1997 price. And so the whole industry is facing this slowdown. And I think Chipotle is one of the ones you want to bet on the rebound because, again, if we go to their net income, even though it did decline and the margins are getting hurt and the sales are missing all expectations, they still make 300 to 400 million of net income a quarter. Still great numbers, but honestly, it might be a little expensive right here. I'm not expecting a recession. Yeah, 2 quarters of negative GDP. I guess if the inflation bubble stuff, part of, I guess, our GDP is being propped up by AI spend and stuff. But yeah, I agree. And even if we do go into a recession, actually someone said McDonald's. Yeah, McDonald's is actually my favorite way. McDonald's has literally like the best chart of any blue chip I've ever seen. Look at this. Actually, McDonald's is nearly at an all-time high, and you get the nice dividend on them. But yeah, I am a shareholder of McDonald's. They're a whole different business model than Chipotle because McDonald's, the corporation, like this is a crazy stock right here, just doesn't go down. Actually, they were the best performing stock in the Dow 30 in 2008. McDonald's benefits from a recession, but they're really a real estate royalty company. They own the land under 80% of all the stores and collect rent from every tenant, and they collect a royalty from every store. If you go spend $100 at any McDonald's, $4 of that goes back to this parent company as legit a royalty, sales and marketing royalty. Because the corporation does a bunch of advertising and all the franchises benefit from it, so they don't mind paying that little feedback to them. Anywho, hey, good time. What up, man? Appreciate that. Yeah, if you guys went to follow button, we stream every day. I'm actually going to end the stream here in a little bit. We've been live for over 2 hours now. I've been having a fun time. But yeah, thoughts on BE? Yeah, hey Nate, this one is benefiting from the whole AI electricity demand right now. It's just way too expensive. Look at the current price. They currently trade at 1,100 times net income. Well, that's so expensive. So we look at the forward multiple. They're trading at 280 times next year's net income. So there's a lot of future growth that's being expected, and that might be what's being priced into this stock right now. Oh, wow. They've actually been net income negative for the past 3 quarters. Are the sales growing? So the top line has been good. I mean, like 57% sales growth, 20. I mean, honestly, nothing's really blowing me away. Let's see right here. What does this company do? A solid oxide fuel cell-based power generation platform. Okay. Here's their website right here. The power problem. Fast, reliable power. So they do like microgrids, off-grid. Advantages available as little as 90 days. So here's kind of the industries that they service, data centers, utilities. I bet that's probably why the stock is blooming right now, because their products might be in such demand from this. What are the expectations? That's probably what we should check, the forward expectations. So actually huge beat on revenue this quarter. They expected 428. They did 520. So that's impressive. But they have been missing on net income / EPS the past 2 quarters. But anyway, interesting for Bloom Energy. Wouldn't have it as a meaningful size position. Might not be this year, but it's coming. Hey, what up, Bandits? Yeah, the recession. OSIS. What is that company? I don't know if I've ever heard of this stock before. So this is OSI Systems. They've done phenomenal. I mean, they're at an all-time high. Let's see what they do. Maybe it's like a robotics play or something. And look at this. So the forward PE is a 25. That implies to me that this is the kind of stock that's probably just going to continue to climb higher. Like, I wouldn't probably trim or sell out of this name. So security division, no way. I'm always a big fan of, I don't know if this is like cybersecurity, but it's like an AI-proof part of software. What is this? Optoelectronics, that grew 11% year over year, and healthcare division. So I like how diversified that they are. The security division is the main growth driver there. So this quarter, in the past 3 quarters, they've been on revenue. They met exactly on EPS, and they met on EBITDA. So analysts are right about this one. Yeah, 25 forward PE, and this is good net income. And specifically the growth rate. I mean, double-digit growth rate year over year. They're doing, if you average it out, like 40 mil of after-tax net income a quarter. And yeah, wow, that's after they pay every quarter. That's after they pay like 10, 15 mil of taxes. That's great. Let me check out their website maybe really quickly. OSI Systems. Maybe it's like a cybersecurity name. And I do like cybersecurity. Or maybe just security. Global provider of security screening solutions, equipment, and services. They also service healthcare. And yeah, optoelectronics. Niche, interesting name there. 7,300 employees. Ooh, SoFi and NU. Yo, NU is actually a pretty cool company. Wait, they make stuff to see through walls for border checkpoints, ports, etc. Oh, so kind of like, yeah, like an airport, how they scan your bags and stuff. It's actually pretty interesting. What was that one again? OSIS for that one. Yeah, OSIS. So here's NU Holdings. This is actually a pretty cool one. This is NU Holdings. What's the point of this? Please explain. Yo, we're just analyzing stocks right now, so there is kind of no point. We're just looking for, actually the title of this stream is we're looking for stocks to buy next week. And we're seeing if they're good or bad stocks, all the recommendations. Actually, I'm actually about to end the stream here, but if you go to the very beginning of the stream, you can see I went over 5 stocks. I picked my own. I'll probably go over them in a minute again. But here's NU Holdings. This is a crypto bank out of Brazil. I love, love, love this stock. They're headquartered in the Cayman Islands or the Marshall Islands, so they pay no taxes at all. And they're actually applying for the U.S. banking charter right now. But if we go to where the revenue comes from, 93% of it comes from Brazil. And this is a crypto bank out of Brazil, where in Brazil, that's where they actually use crypto for transactional purposes. Because in the U.S., we don't really do that. But look at this net income. This is the best part. 780 million net income, up 41% after grade 82. So phenomenal growth. So crazy growth on NU. What is this site? Yeah, hey, this is actually a brokerage. It's a software. If you want to get this app or brokerage I'm on, it's in the link tree in my bio, the very first link there. It is an affiliate link, so if you go and like deposit $100, we'll both get some free links, or free stocks. But yeah, my favorite brokerage. Yeah, a lot of people like it just to deposit their cash and earn the nice APY. And yeah, free brokerage, in my opinion, has all the best analysis tools. Like you get the Pelosi tracker and all that. That's kind of cool. By the way, all these are all brokerages. You know, they ask for a bunch of information, send you a tax form at the end of the year. Well, if they have to, because if you make a bunch of money. But anyway, yeah, all these brokerages are on the link tree in my bio. This one just happens to be my favorite. That's why we're doing all the analysis on this one. Very first link in the link tree in my bio. Or you can just type it into Google, a broker called Moomoo. Okay. Saying it's overpriced, but I think consumer stocks could do great. What are you bullish on? Okay, actually check this out right here. So here are the stocks that I was kind of talking about I think are interesting for next week here. Otis Worldwide, this is this is such a niche company. They service escalators. Literally 65% of the revenue is servicing escalators. And then the new equipment, they install those escalators and then they serve it. Most of the money comes from servicing. This kind of like reminds me of Comfort Systems. They install the modular HVAC for you and then they service it too. So yeah, like for example, the Eiffel Tower uses them. It's one of their customers. Okay, yeah, no cookies for you, buddy. Strength in numbers. Unit service 2.4 million, 2.4 billion people moved daily with their escalators. Kind of cool. I guess here's some of their projects right here. The largest tower in the whole world is that one right there. Yeah, Eiffel Tower. They're in cruise ships. You know, a lot of malls and just what your businesses use escalators. Anyway, it's just like a cool company. I've never heard of real competition for them, or I don't know. And some other stocks. Yes, Southern Company, ticker symbol SO. If you're looking for a bit of a higher yield, if you want like yield on your cash, this one's great. It's a regulated utility, qualified dividend, 3.5% dividend yield. I think it should give you a nice dividend yield and keep up still with stock price appreciation. Should keep up with the S&P 500 because it's a regulated utility. Pretty much just gives you 7% of all your money, 7% of your money back a year total return average. So pretty cool there. If you go to let's see. Are you bullish on MU going into earnings? Yeah, MU actually does report earnings. This is a great stock. Of course, they fell with all the AI stuff, but they trade at a 13 forward PE. They traded at 13 forward PE. In my opinion, this is a $300 stock, like easy. So, like even buying it today wouldn't be crazy just because of the EPS growth. Like look at this right here. The EPS, this is what the analysts expect. They always slightly beat on expectations, but the EPS next quarter is going to be $3.80. It's already a record. EPS was a record this quarter. It's never been higher. It was $2.80. Next quarter, they're expecting $3.80. And then $4.50. So that forward PE of a 13 really is real. They really have been experiencing this crazy growth. The sales are up 46% after grew 93, and the net income's up 230. So the margins are 30% net margin. So anyway, if I own that stock, I would definitely not trim or sell a single share. That's one that's probably just going to continue to climb higher. Zscaler, yeah, hey, this will probably be like the last one we look at here. This is a cybersecurity name. They just can't get profitable though. Dang, yeah. So they reported earnings. Let's actually go look at what their earnings report was because I'm curious about that. I actually used to own them. Like I owned the stock probably 3 years ago. Let's see. Um, Zscaler faces investor concerns over valuation and revenue growth. Huh. So has an elevated price to sales ratio of 13 and forecasts its annual revenue growth of 20%, below the industry average of 31%. Anyway, let's just go look at their actual numbers. What did they report? So this quarter, they beat on revenue. So analysts expected 770. They did 780. They beat on revenue. They beat on EPS. And they beat on EBITDA. So it was a triple B quarter. But yeah, actually, they're barely losing any net income. I mean, 10, 15 mil a quarter. They can so easily afford that. The top line growth, yeah, 20, that's good. 25%, after grew 25%, after grew 39%, after grew 54%. So yeah, it looks like the growth rate is slowing, but this is still good. 25%. Are they buying a business? So maybe the organic growth is much lower. So they actually bought a company, it looks like, for 1.7 billion. But I love the fact that they just like bought a company for 1.7 billion dollars. I love that. Zscaler leads the market revenue, followed by Cisco. Anyway, well, what's their where's the revenue come from? Okay, so yeah, 50% of the revenue comes from the US. So this is a cybersecurity play. I probably like Palo Alto Networks more than Zscaler. But let's actually go look at the earnings hub they don't have one. Oh well. But yeah, there's Zscaler for you. Probably a little expensive, but I do like them. So yeah, let me end this off with a quick portfolio update. So this is our Moomoo portfolio right here, where once you buy a stock in here, I never sell it. And these are all the stocks that we own in here. I didn't really make any moves on Friday, except for I bought another share of Amphenol Group. They're a nice little AI beneficiary. So, I also have been nibbling on Ferrari. I'm never opposed to buying fractional shares. So I bought 0.01 or 0.1 share of Ferrari. I don't mind buying fractional shares. So we also have a Robinhood portfolio known as our dividend-only portfolio, where every stock in here pays a dividend. And all these stocks are in the S&P 500 as well. And yeah, we're up on every stock except for Carlyle Group right there, unfortunately. But yeah, we also have a Roth IRA in here. A Roth IRA is just a tax-free retirement account. We started this almost exactly a year ago. These are all the stocks we own in there. And then we have so many stocks and portfolios, I know. And then we have our Webull portfolio, known as our risk on account. I love being fully transparent. Yeah, there's our open profit and loss. We're only up 19.5% all time. Definitely underperformed. But yeah, we got some losers and some winners. Yeah, Southern Company is my most recent purchase in here. If you're looking to up your yield, a 3.5% dividend that doesn't lack on stock price appreciation as well, I think. I got Progressive too. Iron Mountain's another one of our new positions. And Call Maine, the chicken egg provider with a nice dividend. So yeah, I gotta go. But if we've been live streaming for 2 hours and 15 minutes. If you want to support me, the only way to support me is to hit the follow button, hit the like button. I literally sell nothing. I have no course, book, on literally nothing. Watch out for people impersonating me. I'll never follow you, DM you, nothing like that. So yeah, best way to support me, subscribe to my YouTube channel. It's called Nathan Roberts. Also in the link tree in my bio. If you missed anything, you can replay it. Hey, if you go leave a stream on, like, the stream ends right now, but if you go on the stream after and go leave a comment saying, hey, at the very beginning of the next stream, can you analyze this stock, or can you give me your thoughts on this stock? I'll leave a nice little comment for you responded to it. Anyway, best way to support me is just sub to the YouTube channel. Go leave a comment. Say you came from the TikTok stream. See you later. Thank you so much. We stream every day. We'll be streaming tomorrow. We're doing two 3-hour streams tomorrow. We'll be live for 6 hours tomorrow. So thank you. And thank you to everyone on the YouTube stream. Jay, Plasma, Dylan, Pulse, Brian, Paul, all the members. Hope you guys have a great rest of your day. Thank you for being here. Join us tomorrow